All right. Hi guys. How's the audio and video? Just quickly give me an update in the chat box so that we can get started for the day. I'll quickly list down the targets that we are going to do today so that we can, be very clear what we're going to learn today. All right. It's good. It's good. All right. All right. All right. Perfect. 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 Okay. Perfect, guys. Now, one thing that I realized the last time that we didn't do was we started with an easier topic. So my aim today is that we start with a topic which is a bit tough and we combine that with two easy topics. ठीक है ताकि अपने लिए easy हो जाए. Now because of my throat, I think I won't be able to finish up all four topics. अपना क्या क्या बचा है? We are left with analysis of cash flow 1 and 2. We are left with the taxes reading and we are left with what what do you call topics in long term liability and equity. That is what we are left with. तो ये long term liability and equity वाला एक जो topic बचा है, this is what we are left with. Now, apart from that, in portfolio management also, we are left with something which is called as portfolio management risk, the reading which is called as risk and return part 2. ठीक है? That is what we are left with. Now, my idea was कि आज I can finish up this, I can finish up this. Taxes and portfolio management part 1 and part 2, I'll finish up tomorrow. So that we have an effective revision for 3 to 4 hours. We can get done with these two topics. एकदम अच्छे से समझा, आगे बढ़े. Tomorrow we start with taxes fresh in the morning and we finish up this as well. That is what the idea is. ठीक है. So I have quickly listed down. अब जब तक हमारा ये होगा आज, the topics that I've listed down, till that time we'll be continuing with the marathon. All right, that is what the idea is. Okay. Now, uh, just give me a second. All right. So let's get started, guys. All right, fair enough. Let's get started. All right. Now, if you guys remember, and if you guys know this, and you guys must have studied this so far, guys, this reading, which is called as topics in long-term equity and liability, this is divided into two aspects. The first aspect is the leasing aspect. And the second aspect is something to do with, defined benefit plan, defined contribution plan. So something to do with retirement benefits, right? And also some part of it talks about stock or share-based payments, right? So this is what the two chapters have, the chapter has been defined, has been divided into. Now I've seen a lot of times students face a lot of issue here and also here. Sir, what is defined contribution plan? Sir, what is defined benefit plan? Sir, वो सब service cost, past service cost, वो सब इतना कुछ दिया है. Sir, how do we comprehend it? What exactly is relevant for us? All of that students face an issue. In leasing also students are confused कि sir वो lesser है, lessee है, क्या है? We don't understand that much in terms of calculation because उन्होंने confuse कर दिया US GAAP IFRS में क्या difference है. All of that we shall discuss today. Don't worry. Anyway, let's get started. We'll start with leasing wala part, and then we go on to our retirement benefit, our the part of retirement benefit, and then we get done with the whole thing. All right, let's get started, guys. What do you mean by leasing essentially? Sir, leasing is renting. That is what it is. In simplicity, leasing is renting. Obviously, in renting, there's somebody who rents the apartment, rents the place, and there's somebody who's taking the place on rent. That is how it works. Exactly like that. In lease also, there's going to be a lessee who is taking something on rent, and there's going to be a lessor who is giving something, who's ultimately the person who is given something on rent. That is what it is. So somebody who's a lessee, somebody who's a lessee has the right to use the asset, and somebody who's the lessor leases the asset. That is what it is, and that is what your leasing is, right? Fair enough, very simple, easy to understand, nothing complicated here, not a lot to explain, right? But this one thing that you should remember, like how you pay rent, exactly like that, lessee will pay the lessor every month a certain fixed amount for using the asset or to have the right to use the asset, right? That is what it is. Now, if you guys understand, for any contract to qualify as a lease, these are basic requirements. Anyway, pretty simple and easy to understand. The asset is very specific. It has to be specific that you should be able to identify कि भाई ये this is the asset which is going to be given on lease. The economic benefits should be flowing from the lease to the lessee. That is what it is, and he should get a right to use. Right, that is what it is. And again, pretty simple and easy to understand. I'll not waste a lot of time here. Now, what are the advantages of leasing over purchasing, sir? Outright purchase, if I make, leasing makes, it would result in, if I make an outright purchase, it would result in a huge capital outflow. It might result in me ending up paying a lot of money, or probably borrowing money and then sort of what do you call, buying the asset. Then I might have to pay interest. That loan might be there in my firm for a long time. So if the loan is there in my firm for a long time, sir, it might result in impacting different ratios. A lot of things are there. So, sir, leasing makes more sense over purchasing for the following reasons. First, sir, there is lesser initial cash outflow. I'm taking something on rent. I'm not purchasing it. So I don't have to have that outflow that I generally require when I purchase an asset. Sir, the financing costs are usually, lowered. Now, lease is secured by lease assets. So now, what do you mean by lower financing cost? And the first point, where lease is secured by the leased asset. Sir, what do you mean by this? This part you will understand more. In fact, for that matter, the second part as well, the second point as well, when we sort of do all the calculations, when we understand everything, जब हम लोग सब कुछ कर लेंगे, when we understand all the calculations from lessee, lessors, all of those perspective, you sort of will be able to understand this very well. Obviously, the last part is there's lower risk of obsolescence. Why? Because in lease, you don't own the asset. So at the end of the lease, you sort of return the asset to the lessor. But when you own the asset and the useful life of the asset is done, you sort of face, and not done for that matter, in between the life only. I would not even get to the end. In between the life, you always face the risk of obsolescence, right? Because what if the asset goes out of use tomorrow? Something technologically advanced has come and your asset is no more is not fulfilling the job it is supposed to, and some new asset has replaced it. So your asset is no more going to serve its full potential. So it has become obsolete. So if it has become obsolete, then if you are the owner, you would have to take that loss. But if you have taken that on lease, it is the loss of the lessor, because you owns the asset and you're just paying the lease rent, right? That is what it is. The lessee also avoids the risk of decline in the asset's value at the end of the term, right? So when you return the asset at the end of the term to the lessor, you don't face the issue of what will happen with the asset if the decline in the value is there. How am I going to be able to sell the asset? Scrap and stuff like that. Risk may shift to the lessee if there's a guaranteed residual value clause. Now, what exactly is this? Now, let's say, for example, if I give something on lease. Okay, there's lessee. Okay, there's lessor. Okay, so these are the parties. Let's say, for example, the asset that is given by the lessor has a life of 4 years, and the lease term is also 4 years. Sir, the life of the asset that is 4 years, the lease term is also 4 years. So you're saying that the asset has been given on lease for its complete life? Yes, it has been given lease on for its complete life. Okay, sir, fair enough. This type of lease can be financial lease, sir. We do understand that part a bit. We do understand that a bit. Okay, sir, this type of lease will be a financial lease. Okay, fair enough. The point is that okay, at the end of the lease term, that is after 4 years, the lessee will return the asset to the lessor. Now the lessor will have no use of the asset, because sir, the life of the asset is over. Now for lessor also, this asset is useless. So what will lessor do? Sir, lessor will go and sell it in the market. And whatever he realizes from the market will be called as what? Residual value. What do you mean by residual value? Basically your salvage value. Okay, sir, fair enough. All right. Now, lessor sometimes term, in the lease contract, basically, not the term for that matter. Yeah. So lessor sometimes in the lease contract would say that, listen, lessee, at the end of the life, you are supposed to give me a guaranteed residual value, a guaranteed salvage value. So let's say, for example, lessee in the agreement guarantees the lessor that, listen, at the end of the life, I will give you 3,000 rupees as a guaranteed residual value. Okay. Sir, what if this clause doesn't exist? Then this residual value is unguaranteed and it is the headache of the lessor. So, sir, the point is that the salvage value that is going to be realized from the asset at the end, if it is guaranteed by the lessee, it becomes guaranteed residual value. And obviously, the risk of decline in the value of the asset at the end of the life is now the risk of lessee, because he has guaranteed a residual value to the lessor. But sir, the same thing, if the same clause doesn't exist, if none of this happens, what happens? The residual value is the headache of lessor. He faces the risk of decline in the value of the asset, and that's why the residual value will be called as unguaranteed residual value, and that's how your residual value functions in terms of guaranteed and unguaranteed. All right, sir, fair enough. This point, which I feel a lot of confusion exists for a lot of students, I have sort of explained that in best of the ways I could. If quickly you guys have understood this, quickly yes or no in the chat box so that I can proceed. I can understand that the pace is right. If you're not going too fast, everything else. So quickly in the chat box, yes or no. Have you guys understood this? All right, perfect, fair enough. Okay, let's move forward now. Let's move forward. Now, under IFRS and US GAAP, understand under IFRS and US GAAP, the classification of lease remains the same. Sir, how is the classification of lease? Now, lease is classified either as an operating lease or either as a finance lease. What? It is classified either as an operating lease or either as a finance lease. Okay, sir, what do you mean by operating lease? What do you mean by finance lease? But understand, there is no difference in the classification in US GAAP and IFRS. Sir, what do you mean by difference in classification? US GAAP recognizes that lease is of two types, or operating lease, financial lease. IFRS recognizes that lease is of two types, operating lease and financial lease. Understand this. The accounting of it might differ a little. That's a different thing. वो बाद में discuss करेंगे. But the point is that right now they both recognize that the lease is classified in two parts, which is in two ways, which is operating and financial. Okay, sir, fair enough. Sir, what do you mean by financial lease? What do you mean by operating lease? What is the difference? Financial lease means a lease will be classified as financial lease when the benefit of ownership and the risk of ownership are sustainably transferred to the lessee. So the benefit of ownership and the risk of ownership is transferred to the lessee. Are you telling me that it is as good as purchase? Let us try to put this point as good as purchase. Yes, sir. Let us try to put this point as good as purchase. So meaning that whenever a lessee takes an asset from the lessor on lease, and this lease is as good as purchase, that lease will be called as financial lease. Sir, how do we identify that something is as good as purchase? We look for these 2 points. But before we understand these 2 points, let us understand a few things that will make, ultimately the chronology is that these points that I've written down right here, these points will make a lease financial lease. These points will make a lease as good as a purchase. Understand this. The point is that, sir, a lease will be classified as financial lease if it is as good as a purchase. Sir, what makes it as good as a purchase? These following points. Okay, sir, fair enough. Let's understand. What are those points? But understand these points, if you meet any of the above or any of the below, my bad, if you meet any of the below points or any of the below conditions, your lease will be classified as a financial lease. So, sir, the point is that a financial lease is something that is as good as a purchase. Sir, what makes a lease as good as a purchase? So, the following points. Sir, do I have to satisfy all the following points to make my lease a financial lease? No. If I satisfy any of the following points, then my lease will become a financial lease. Any means anyone. So, let's say, for example, at the end of the lease, the ownership is transferred of the leased asset from the lessee to the lessor. Okay, so sir, are you telling me that when the lease term ends, the lessee will become the owner of the asset that the lessor gave him on lease? Yes. Purchase option. The lessee has an option to purchase the asset. The lessee has an option to purchase the asset, and he is expected to exercise that option. Just give me a second, guys. All right, guys. Now, coming back to what I was explaining. Sir, we were talking about leases. Leases are of two types. It is financial lease, it is operating lease. Okay, fair enough. Sir, leases of two types, operating and financial. Sir, are these two types recognized by IFRS and US GAAP both? Yes. Both the types are recognized by IFRS and US GAAP. Okay, sir, fair enough. Sir, what makes a lease financial lease? Sir, financial lease is a lease which is as good as a purchase. Okay, how do we identify that it is as good as a purchase? Sir, we have to satisfy the following conditions, the following points. Okay, sir, the following points. Do I have to satisfy all the following points? No, I don't need to satisfy all the following points. Even if I satisfy one of the points, my lease will become what? A financial lease. Sir, what are those points? First point, at the end of the lease, the ownership of the asset will transfer from lessor to the lessee. That is what it is. Sir, at the end of the lease means the end of the lease term. That's the first point. Sir, second condition, at the end of the lease term, the lessee has an option to buy the asset and he's expected to exercise that option. You are expecting that the lessee is going to exercise that option. Sir, how can we predict? Of course, you can take an estimation. You can sort of guess, okay, that he might exercise, whatever that may be. Right? And that exercise option is going to be a little below than the market price of the asset at that point. So it is basically at a very cheaper price. Ki, yaar, theek hai, at the end of the lease term, you just give me a nominal amount and purchase the asset. Simple as that. Obviously, you're not going to be tested on these conditions. I'm trying to just explain more and more so that you are clear because this is a tougher condition. All right. The third one, lease term. The lease term covers most of the asset's useful life. Again, most of the asset's useful life. Ideally, 90% or more. So let's say, for example, the asset's life is 4 years. If your lease term is 4 years, your lease will be called as financial lease. If it is 3.5, your lease will be called as operating lease because it doesn't cover at least 90% of the life. Because how much is the 90% of the life of the asset? 3.6 years or more. So if the lease term covers 3.6 years or more, then your lease will become what? A financial lease. So at least 90% is what the general criteria is. Now, again, don't quote me on 90%. Just understand the word most. And you will be able to guess in the exam if this question comes that, whether it is a financial lease or operating lease, it covers, this is what the life of the asset is. So majorly you will not be tested on, 90%, 95%. What is that? It will be very simple and straightforward. You will be able to guess ki, theek hai yaar, ye financial lease, it covers most of the life. The next is present value test. Now, what do you mean by present value test? The present value of the lease payments that are going to be paid in the lease. Sir, in the lease, lessee will pay the lessor over the lease term. Let's say the lease term is 5 years and 10,000 rupees is per month, is per year the lease payment. So, sir, 50,000 rupees are going to be the total lease payments. If you take present value of of that 50,000 rupees, that will become present value of lease payments. And if such a present value of lease payment is greater than or equal to the asset's fair value, then what? Then your lease becomes financial lease. Okay, sir, fair enough. So, sir, assets fair value was 45,000 and the present value of lease payments came down to 46,000. Then what? The present value of lease payments is greater than the asset's fair value that makes the lease what lease? Financial lease. I'll again repeat, you just have to satisfy any one of the condition. This is or, and at the end, I'll also put an or. And the asset is a specialized asset. It is specially made by the lessor for the lessee, and it has no use for the lessor. It is of a specialized nature which can only be used by the lessee. No one else can use it, nor lessor, nor anyone else. No one else can use it. Only lessee can use it. Lessor has made it specifically for the purpose of lessee. Okay, fair enough. That is what it is. All right. So these are the conditions. These are the conditions that make a lease what? A financial lease. And you can see here, if you satisfy any of the condition, the risk of ownership and the the benefit of ownership and the risk of ownership both are transferred substantially. Example, if my asset's life is 4 years and the lease term is 4 years, that means whatever are the benefits out of the asset, whatever are the risks out of the assets are completely now of lessee. It has been transferred to him. That means he is as good as an owner. That means this type of lease is a financial lease. Understand this? Sir, the present value of lease payments is 46,000. The fair value of the asset is 45,000. That means whatever is being paid in the lease is majorly whatever the asset's fair value is. I mean, it covers majorly the asset's fair value. Fair enough, sir. That is what is happening. That means it is as good as a sale. Okay, it is just that the payment is being made over time. Okay, fair enough. Sir, that means that the lessee is paying majorly everything. I mean, is paying majorly the entire asset's fair value. That means it is as good as buying the asset. That means it is as good as enjoying the benefit and risks that are going to come out of the asset. It is as good as purchase. That is what the point is that makes a lease financial lease. And if it is not a financial lease, it becomes an operating lease, which is your normal rent. So what do you mean normal rent? What does that, what exactly happens here? We'll understand this via a numerical example, don't worry. But the point is, sir, the lease can be operating lease or financial lease. Financial lease is as good as purchase. What makes a financial lease a financial lease? These are the 5 points. If any of the points are satisfied, your lease becomes a financial lease. All right. Now, the moment your lease becomes a financial lease, what will happen in terms of calculations, that is yet to be discussed. Right. But it is as good as purchase. Sir, what is operating lease? Operating lease is a normal renting scenario. Okay, sir, fair enough. What happens there? We'll also understand that via calculation. But these are the classifications of leases, operating or financial, recognized by both IFRS and US GAAP. Right? That is the first point. Now, sir, how would the accounting work? Sir, how would the accounting work? If it is a financial lease, how would the accounting work? If it is an operating lease, how would the accounting work? If it is a financial lease, obviously the accounting would work from a point, we have to understand accounting from a point of view of lessee and from a point of view of lessor. If it is an operating lease, we have to understand the accounting from a purpose of from a point of view of lessee and from a point of view of lessor as well. All right. Now the point is that just give me a second, guys. Just again, sorry, there's a little disturbance. Just give me a minute. I'll just be back with. Yes, guys. So now the point is that the financial lease calculation is going to be a little difficult in terms of lessee. Otherwise, everything else is pretty simple. Even operating lease to understand from a perspective of lessee, pretty simple. If you understand financial lease from a perspective of lessee. So let's get started. Let us understand what? Let us understand the lease accounting. Lease accounting from a perspective of lessee for a financial lease. This is where we are. This is what we are trying to understand. Now, obviously, we will have to understand this from two different perspectives. First, IFRS, second, US GAAP. Okay, sir, fair enough. Let's get started. Let us understand lease accounting under IFRS for lessee. For which type of lease, sir? Financial lease. Under IFRS, you recognize something which is called as an ROU asset and a lease liability. Sir, meaning, sir, the lease that I have taken is a financial lease. Fair enough, it's a financial lease. This lease will be classified, which is a financial lease, will be classified under IFRS in terms of accounting. Exactly how is what we're trying to understand. Okay, sir, fair enough. That's what we're trying to understand. Let us get started. Okay, so sir, whenever I take something on lease, I have taken it on rent. Okay. So sir, it becomes a financial, if it is a financial lease, how would the accounting happen? I would recognize something which is called as an ROU asset and a lease liability. Imagine that you are taking an asset on loan. You are purchasing an asset on loan. Understand this. Always write here that you are purchasing an asset on loan. Sir, whenever I'm purchasing an asset on loan, what happens? A loan is created and I become the owner of the asset. So an asset will be recognized in my balance sheet, obviously as an asset, and loan will be recognized as a liability in my balance sheet. Exactly like that, inspired from there, there's something, there are two things that are going to be created. One, which is ROU asset, and the other one, which is lease liability. Sir, ROU asset, sir, basically an asset will be created, but I'm taking something on lease. Uh, Sir, we have learned so far, whatever accounting that we have done, if you guys have done it, that if we take something on rent or lease, we just have to recognize renting expense. That's it. But here, uh, we are recognizing an asset, we are recognizing a liability, and you're saying that it is as good as a purchase. We don't get it. What is the reason for it? Guys, a lot of times, people can escape. I'll again repeat, people can escape the repercussions that are going to be caused from purchasing an asset on loan via entering into a lease arrangement. Basically, what? Whenever I purchase an asset on loan, what happens? Sir, loan आया तो there's going to be a liability. Interest expense is going to be there. All of those things are there. Liability is there. So debt will come. Debt will come. So that will affect my ratios that are related to debt. Sir, if I purchase an asset, sir, if I purchase an asset, okay, fair enough. Asset will come in my balance sheet. That will happen. Okay, sir, all of this will sort of affect my ratios a little. Why? Because if asset comes tomorrow, my profit is there. So if my asset increases, my return on total assets might fall down. Stuff like that. So what to do, sir? Let us just do one thing. Let us not purchase an asset, but let us take an asset on lease for the entire life of the asset. Oh, that makes you as good as an owner because you are going to enjoy all the benefits and risks substantially from the asset. But you don't. But you don't what? You don't recognize an asset and liability like how you would have recognized if you would have bought it on loan. सर एक बार वापस समझाओ सर नहीं समझ में आ रहा इमेजिन देर आर नो क्लासिफिकेशन लाइक फाइनेंशियल लीज ऑपरेटिंग लीज you just take a rent lease you just take an asset on rent when you take an asset on rent you just recognize rent expense and nothing else comes in your financial statements. Now what happens? Now what happens rather than purchasing an asset on loan? What can a firm do? What can an organization do? So it can just directly do one thing that it can directly go and enter into a lease arrangement which is as good as for the entire life of the lease. That makes it the owner. Okay, so sir, it is the owner in substance, but it is not recognizing an asset or liability or anything of that sort and just recognizing rent expense. That is just so good for its financial statement. Its ratios are not going to be impacted a lot. The accounting bodies understood this. What did they do? That's why they made two classifications, financial lease and operating lease. They said that, listen, the conditions are met of financial lease. That means you are as good as the owner. You are purchasing the asset. Please recognize an asset and liability because it is as good as not purchase. I would say I would improve that as good as a purchase, as good as purchasing an asset on loan. And that's why these two things are created. Now, obviously, you're not literally taking a loan and you're not literally purchasing the asset. So they understood that as well. So what did they do? They said that, listen, recognize an asset, which is equal to the present value of lease payments that you're going to make. As a lessee, whatever lease payments you're going to make, recognize that as a ROU asset in the form of present value of lease payments. Okay, fair enough, sir. So an asset is recognized. How we would have recognized an asset if we would have purchased an asset on loan? Sir, what about the loan? Your liability is going to be created? Yes. Like how, it is for the fact for the time when you purchase an asset on loan. Your liability is also going to be created. Sir, what would that liability be? It would be called as lease liability. Sir, at what rate, at what amount this lease liability is going to be recognized? Same as ROU asset, basically present value of lease payments. Okay. So it is going to be what? It is going to be the present value of lease payment. So, sir, to again cut the long story short, sir, what was happening earlier? People were taking, rather than purchasing an asset on loan, people were entering into lease terms which made them as good as the owner. Accounting bodies understood this. That's why they said that, listen, make two lease classifications, operating lease and financing lease. Financing leases are the leases where you are as good as the owner. Sir, as good as the owner meaning we are purchasing an asset on loan. Okay, fair enough, sir. When we purchase an asset on loan, we recognize a loan and we recognize an asset. Okay, sir. But here in this case, do we have a loan? No. So do we have an asset that we are purchasing? No, sir. We are purchasing a right to use the asset. So what do we recognize here, sir? It is as good as a purchasing an asset on loan. So there has to be asset, there has to be liability that has to come. So what is going to be the asset? ROU asset is going to be the one that is going to be recognized. Sir, what is going to be the liability that is going to be recognized? Sir, lease liability is going to be recognized. Sir, ROU asset and lease liability is going to be recognized at what rate, at what price? Sir, it is at what amount basically? It is going to be recognized at present value of lease payments. And that is what happens. All right, fair enough. And remember, this particular type of lease, what? This particular type of lease, basically financial lease, covers all the leases where you become substantially the owner, where you get the benefits and risks, except for what kind of leases? Something that is short term, less than 12 months, and where and something that is a low value lease where the lease rent is less than equal to 5,000. So these are the two leases that are removed from the purview of classifying something as a financial lease. That means they will be classified as an operating lease only. Sir, what are we trying to talk about? Sir, we are what are we trying to understand? We are trying to understand lease accounting in IFRS from a perspective of lessee. That is what this is where we are. This is where we are, and we are talking about IFRS currently. And IFRS says that listen, even if all the benefits, all the risks are transferred, and the lease is a financial lease, but what? But it is a short-term lease less than 12 months or less than equal to 10 months, or the lease rent is less than equal to $5,000. Then what? Then classifies it as an operating lease only. So even if the condition of financial leases is met, but these two things are there where it is a short-term lease or the lease rent is less than equal to 5,000, then do you do what? You classify that lease as an operating lease only. Okay, sir. Sir, I recognize ROU asset. Sir, what is ROU asset? Right to use the asset. So it tells us that I have a right over the asset for the X number of years. That is what ROU asset is. Okay, ROU asset is that. Fair enough. Sir, how would I treat it in the balance sheet? I would classify this as an intangible asset because it is not a tangible asset. You have recognized an asset on the basis of right you have. That's what makes it what? That's what makes it an intangible asset. And what do you do with this intangible asset? Amortize it over the lease term. Very, very important. And what the amortization expense, if you're amortizing, will come in income statement for sure, sir. And sir, how now this part, don't worry, we'll explain again when we do the calculation. And lease liability would, how would that be recognized? Sir, it would be recognized at present value of lease payments. Uh, so then how would the calculation work? For a lease liability, for a lease payment, let us discuss that calculation now. Let us try to understand the whole thing by an example. Sir, where am I, sir? एक बार repeat कर दो ना, sir. Where are you? Where are you? As in not literally, but where are we in the quadrant that we were talking about in the graph that we sort of made? Sir, we are talking about leases. We are talking about two types of leases: financial lease and operating lease. Sir, financial lease, now obviously there's going to be a lesser and lessee. In operating lease, there's going to be a lesser and lessee. Sir, we are talking about lessee's accounting in financial lease. That too from which perspective? IFRS perspective. Understand this. Obviously, sir, lease in financial, sir, when the lease is financial lease, it is as good as you taking an asset on loan. That is what it is, purchasing an asset on loan. So when we purchase an asset on loan, an asset is recognized and a liability is recognized. Sir, whenever an asset is recognized, a liability is recognized, how would the treatment be? Sir, first things first, or rather than discussing the treatment first, let us first understand what exactly the asset will be recognized. Sir, ROE asset will be recognized. What sort of liability will be recognized? Sir, lease liability will be recognized. Sir, how would the treatment of them would be? Let us try to understand that now. Right. Treatment मैंने आपको बोल दिया मैं डिस्कस नहीं कर रहा हूँ पहले अपन बात करते हैं पूरा let us take an example then we go back to the treatment. All right, so let's get started. There's a company which is called as Technova Limited. It has leased it has leased a specialized equipment for its operations for 5 years. Understand, specialized equipment घंटी बजनी चाहिए. ये लीज कौन से टाइप की लीज लग रही है सर? फाइनेंशियल लीज लग रही है with annual payments of $15,000 at the end of the lease term, which is also the end of equipment lives. Sir, the second criteria, financial lease का एक और criteria meet हो रहा है यहाँ पे. There were five criteria that were there of financial lease. Sir, criteria meaning conditions. Sir, two conditions are being met. First, it is a specialized equipment. Second, sir, the lease term is covering the entire equipment's useful life. That makes this lease financial lease. The equipment is returned to the lessor at the end of the life of the lease. सर लीज टर्म 5 years, लाइफ ऑफ द एसेट इज 5 years, मतलब अब लेसर को रिटर्न करके क्या होगा? लेसर इज गोइंग टू जस्ट पुट इट इन स्क्रैप. The interest rate that is implicit in the lease is 6%. The ROU asset will be amortized on a straight line basis over the 5 year term. Whatever the ROU asset is will be recognized will be amortized, on a straight line basis over the 5 year term. Sir, ROU asset will be amortized on a straight line basis over the 5 year term. अगर मुझे ये नहीं देता तो क्या मेरे को ये if this information was not given to me, would I not be able to do this calculation? I would still be able to because I understand ROU asset will be amortized over the lease term on a straight line basis. Calculate the impact of the lease from Technova's financial statements perspective. That means we are talking about lessee's perspective because Technova has leased that equipment. It is the lessee. And let us understand this accounting under IFRS. Okay, sir, fair enough. Sir, under IFRS, now I'm not going to do literally the calculation with you guys. I hope you guys understand this. I'm not literally going to do the calculation with you guys. We are going to go ahead directly. I'm quickly going to point out things and we'll proceed. I'm not going to literally sit and calculate things. All right. Okay, sir. Sir, under IFRS, there are two things that are going to be recognized. First, it is ROU asset, and second, sir, it is lease liability. That is how this lease is going to be treated because this lease is a financial lease. Okay, so sir, ROU asset is recognized, lease liability is recognized. ROU asset is recognized at what price? At what amount? Present value of lease payment. Sir, lease liability is recognized at what amount? Present value of lease payment. Okay, sir, fair enough. Sir, how many lease payments are there, sir? Five lease payments are there of $15,000. Okay, and sir, what is the discounting rate going to be? Sir, 6%. Let us calculate the present value and you will get the present value of 63,262. Okay, this is what we get. So, sir, ROU asset will be recognized at what? Present value of lease payment, which is 63,262. Sir, lease liability is going to be recognized at what? Present value of lease payment, same 63,262. Sir, we have learned this that ROU asset will be amortized on a straight line basis for the lease term. तो सर इसको amortize कर देते हैं ना तो you will get what is the amortization expense for this year. तो divide कर दिया तो you will get what 12,652 which is going to be the amortization expense every year, and for first year this is what it is going to be. Right, for second year this is what it is going to be, third year this is what it is going to be. So that is what is going to be the amortization expense for this year and also for the continuing next 4 years. Okay, sir, what about the lease liability? How do we treat the lease liability? We make an amortization schedule. Sir, the opening balance is going to be 63,262. Now, this is a liability. On a liability, what do you pay? Imagine this is as good as a loan. That's what I told you. This is as good as purchasing an asset on loan. And whenever you purchase an asset on loan, you have to pay interest. Sir, the rate of interest that is given to me in the question is 6%, which is the discounting rate. So I have to pay 6% as an interest, and the interest amount comes down to 3,796. Okay, but the lease payment has been made is 15,000. So 15,000 that I have paid towards the lease in the form of lease rent to the lessor, fair enough. Sir, how would that be, how do I break that up? Out of 15,000, what is what? Sir, meaning I have taken 63,262 rupees as loan. I have to pay interest on that. It is going to be 3,796. The 3,796 is the first component of the 15,000 rupee payment that I'm making to the lessor. I'm making 15,000 rupee payment. 3,796 of that, out of that belongs to interest that I owe him for the loan that I have taken from him. Sir, what about the rest of the money? What does it belong to? That becomes my principal repayment, which comes to 11,204. Sir, how did I calculate that? 15,000 minus 3,796. This is the principal payment. So you are making as good as an EMI schedule. So 63,000 is what you had borrowed. You paid 15,000 rupees. That means 3,000 was the interest. Rest of it was the principal repayment. This becomes the closing balance of the loan. Because out of 63,000 that you borrowed, I'm sort of taking it rough. 11,200 is what you have paid. This becomes the remaining amount. This is the remaining amount of borrowing that you have now. Okay, sir, fair enough. Now the next year, which is the second year, this is the amount of borrowing that you have. You have to pay 6% interest, but you have paid 15,000. That means the rest of it, 15,000 minus 3,123 becomes the principal repayment. So this is what you sort of owed, and this is the principal that has been repaid. This becomes the closing balance. Okay, sir, fair enough. This becomes the closing balance. All right. So, sir, that will become the opening balance of next year. This is the amount of borrowing that is left after the principal repayment of second year. On that, I have to pay this is the amount of interest, but I've paid 15,000. That means the remaining amount is going to be the principal repayment. This becomes the closing balance of the loan for third year. Exactly like that, you do year four, and at the end of fifth year, remember the closing balance of the loan will become zero. So this was the opening balance of the loan for the fifth year. You have to pay 2%, 6% interest on it. That comes to 855, but you have paid 15,000. That means the remaining money becomes the principal repayment. Hence, you have completely paid the principal. Whatever was owed by you to the lessee to the lessor is completely paid. Now by owed, whatever was owed by you to the lessee, what do I mean by that? Lease liability. I told you, it is as good as taking a loan. Understand when you're making the schedule, understand this and take it as you're taking a loan, and so that it'll be easier for you to make it. Okay, sir, fair enough. So this is what it is. This is what it looks like. All right. So, sir, this is not exactly tallying. We owed 14,248, but we are paying 145. This is not exactly tallying. It doesn't because of the round figure that you do calculations में थोड़ी बहुत ऊपर नीचे होते हैं, सारी चीज़ों की वजह से कभी टैली नहीं होगा. सर, व्हाट टू डू? जस्ट डू वन थिंग. इसको हमेशा बैलेंसिंग फिगर लिख दिया करो. तो यहाँ तो जीरो ही होगा एट द एंड ऑफ द टर्म. तो सर ये क्या होना चाहिए? दिस टेक एज गुड एज 14,248. अब वो ऊपर 100 150 का फर्क आएगा. वन देयर वुड बी अ डिफरेंस ऑफ 100 150, बट लाइक टेक दिट एज अ बैलेंसिंग फिगर. So, sir, are you telling me that again? I'll repeat. There are two types of leases: financial lease, operating lease. Obviously, sir, in every type of lease, there's going to be a lessor and lessee. All right, sir, fair enough. Now we are trying to understand the accounting for a perspective of accounting from a perspective of lessee. Sir, in lessee, we are trying to understand the accounting from the perspective of lessee. Where are we, sir? We are talking about IFRS. IFRS tells us what? That if you take a financial lease and you're talking about lessee, it is as good as yes, purchase the asset on loan. So when you go to purchase an asset on loan, there are two things that is created. One, asset because you've purchased the asset. Second, that is loan because you've taken the asset on loan. Sir, here you have not literally purchased the asset, but you have a right to use the asset, that is ROU asset. So you've not literally taken the loan, but there is a loan of sorts that that lessee is sort of in financial lease taking, that becomes lease liability. So at what amount should we recognize both of them? At present value of lease payment. Okay, sir, fair enough. So ROU asset that has been created, it is going to be amortized over the life of the asset. No, it is going to be recognized over the lease term. So ROU asset that is created here of 63,262 is going to be amortized over the lease term, which is 5 years. That means there's going to be a depreciation expense or amortization expense every year, which is going to be of how much? Which is going to be of 12,652. That is what it is going to be, right? And obviously, as you amortize the asset, it will reduce in value. So 63,000 will reduce by 12,652, will reduce by 12,652, will reduce by 12,652, will reduce by 12,652, and ultimately at the end of the lease term, it will become zero. So ROU asset will completely become zero. Sir, what about the lease liability? We will have to treat the lease liability as good as we have taken a loan. So, sir, 63,262 was the amount that was owed at the start of the year, which is the lease liability. Now, on that, we have to pay 6% interest. But, sir, we have paid 15,000 rupees, but the interest that we owed is only 3,796. What about the rest of the money that we have paid? That becomes what? That becomes the principal repayment. Now, the moment you pay principal, what happens? The amount of loan that is there at the start of the year will come down. Exactly like that, you will have to make for year one, two, three, four, five, and you will understand that how then you will be. I mean, you will have the entire amortization schedule, right? And that is what your accounting, and that's how you. I mean, not accounting. That's how you would recognize your lease liability. And you will notice carefully here, the ratios are going to be impacted here as well. You were trying to escape by entering into a lease agreement or a lease arrangement that you don't, you're trying to escape recognizing an asset, recognizing a liability, you're trying to escape all of that. अकाउंटिंग बॉडी ने क्या बोला? आईएफआरएस ने, इनफैक्ट यूएस गैप सेज द सेम थिंग. अकाउंटिंग बॉडी बोल रहा हूँ जनरली. दे सेड दैट लिसन, we are very smart, we understand that you're trying to escape it, we will have you recognize an asset, we will have you recognize a liability, but in other way, by in the form of ROU asset and lease liability. But the ultimately asset or liability आ गया, ratios are going to be impacted, all of those things are going to be happening, which would have happened if you have purchased the asset on loan. Sir, what will happen in the financial statement? Every year amortization expense will come in the form of how much? 12,652. There's going to be interest expense as well. This is going to also be there in the income statement. So, sir, in income statement, what will happen in income statement? Two things are going to be coming. What? Amortization expense. Apart from that, what will come? Obviously, this interest expense every year. So, in first year, this was the interest expense. Second year, this was the one. Third year, this was the one. Fourth year, this was the one. Fifth year, this was the one. So interest expense will keep on coming every year as per the schedule that is given above. Sir, what will happen in balance sheet? Sir, balance sheet every year asset will be shown. At the start of the year, it was 60,262. At the end of the first year, it was 50,610. At the end of second year, this. At the end of third year, this. At the end of fourth year, this. This is what will happen with your asset. Sir, what about the lease liability? What will be the balance of lease liability in the balance sheet? Obviously, this is what the balance is going to be of the liability every year in the balance sheet as well. And that's how your entire treatment will happen with respect to asset and liability in balance sheet. All right, fair enough. Sir, what about the cash flow statement? Because there are three major types of financial statement: income statement, balance sheet, and cash flow statement. And this is where a lot of students are confused. Guys, remember, we were talking about, I have repeated this 10 times now. We were talking about what? We were talking about financial lease. And in financial lease, where were we, sir? In financial lease, we were in lessee's books and we were talking about IFRS. All right. Sir, how would the accounting happen in terms of cash flow statements? The principal portion will be shown as a financing outflow. That means it will be shown in cash flow from financing. That means in the first year, the principal that you have repaid, 11,204, will be shown as what? CFF, as an outflow, because it is a repayment of loan. Sir, what about the interest expense? What about the interest expense? Remember, in interest, there was a difference in IFRS and US GAAP. IFRS, and we are currently learning IFRS, so I would want to skip this for now. IFRS said that you can either recognize interest as a CFF or a CFO, but in both the cases, it is going to be an outflow only. And if you add the two, principal and interest, it will come to 15,000 only. तो जो आपका कैश आउटफ्लो था ना, in the form of lease payment, in the form of interest, some bit of it is shown as financing outflow. Some bit of it is shown in IFRS as either financing outflow or operating outflow. And is everyone with me so far with respect to this example? Quickly tell me. Yes or नो? अंडरस्टैंडिंग इज द पेस गुड? अगले 1 घंटे में मेरा कोशिश रहेगा कि मैं पूरा पूरा चैप्टर आपके साथ खत्म करूं. माई एंटायर मोटिव इज गोइंग टू बी दैट इन द नेक्स्ट 1 hour और सो आई वांट टू फिनिश दिस एंटायर चैप्टर विथ यू गाइस. Yes or no, guys? Quickly tell me. All right. Okay, guys. So, sir, we were talking about financial lease, and in financial lease, we were in lessee's books, and we were trying to understand the accounting in lessee's book from IFRS perspective. Sir, what about US GAAP? In US GAAP, the accounting is the same. In US GAAP, I'll again repeat, the accounting is the same except for the classification in terms of cash flows. And a few more things I'll repeat. I'll explain that. Sir, meaning accounting more or less remains the same, but the cash flow would differ. Let us understand the whole thing. All right, sir. In US GAAP, other than these differences in cash flow classification, a financial lease is reported as just described as under IFRS. Okay, sir, fair enough. So, sir, everything remains the same under US GAAP as well? Yes, it does, except for the cash flow classification. Sir, and if you guys remember the cash flow classification, the interest portion that is there, the interest portion that is there, that is the only difference here. Sir, meaning everything remains the same. Till the very end, everything remains the same. The only thing that differs is the interest portion will be classified as a cash flow from operations, basically outflow. IFRS gives you an option. It can be financing or operating. US GAAP says that operating only. So, sir, everything remains the same. No difference in IFRS and US GAAP for lessee's accounting in terms of financial lease, except for cash flow classification. Sir, in IFRS, we discussed one point that listen, if the lease, even if it is classified as financial lease, but if it is short term, basically less than equal to 12 months, or the lease payment is less than equal to $5,000, then we don't classify this lease as what? As a financial lease. That means it will be treated as an operating lease. US GAAP says the same thing. US GAAP says that if it is a short term lease, do not treat this as a financial lease, classify it as an operating lease, even if it meets the condition. Same thing, nothing else. Not a short term. And it will be classified as an operating lease. So, sir, we were trying to understand financial lease and we were trying to understand the books of accounts of lessee. This is where we were, and we understood the treatment from IFRS perspective and from US GAAP perspective. This is done, this is done. Okay, sir, fair enough. Sir, let us just do one thing now. Let us also discuss the accounting treatment in the books of lessee for an operating lease. Okay, sir, let us try to understand how exactly an operating lease is going to be treated in the books of accounts of the lessee under IFRS and under US GAAP. Okay, let us start with US GAAP first, guys. I hope you guys are able to comprehend and understand and make structure of things in your head. The way that I'm telling you कि यार ऑपरेटिंग लीज में लेसी की बुक्स में है और हम लोग अब बात कर रहे हैं यूएस गैप की. Okay, fair enough. Sir, one point that was the confusion, that was about the short term thing. Can you explain that again? And I'm repeating this, guys. What did IFRS tell us? That even if the lease is financial lease, but if it is short term, basically the two conditions that were there, then even if that is the case, you recognize this as an operating lease. Exactly that is what is said by US GAAP. And now let us try to understand the accounting in the books of lessee in terms of operating lease. And we start with our very first, which is going to be US GAAP. Guys, you know what? In US GAAP, the accounting is a little complicated. Sir, meaning in US GAAP, for an operating lease, under US GAAP, a lease liability is recorded and amortized under as IFRS. सर तो हम लोगों ने जो अभी पढ़ा पूरा IFRS में, the one that we discussed, lease liability, ROU asset, all of that, that will be created in operating lease as well. Sir, operating lease is the lease where substantially all the ownerships and risk, the benefits and risk, which is, from the asset is not transferred. So basically, only rent should be recognized, right? No. US GAAP says that listen, recognize an ROU asset and a lease liability. ROU asset and a lease liability. But here is a little difference in terms of how ROU asset will be treated. So, sir, how we did in IFRS, ROU asset, lease liability, that is what would be recognized in terms of lessee. Yes, but ROU asset will be treated differently. How would that happen? How would the ROU asset will be treated? Sir, earlier ROU asset was amortized on a straight line basis. What? On a straight line basis over lease term. यहाँ पे वो नहीं होगा. It will not be amortized on a straight line basis. In fact, it will be treated exactly like lease liability. It will be treated exactly like lease liability. Sir, what do I mean by that? And hold this thought for some time. I will explain that to you. But sir, what are we talking about? We are talking about US GAAP currently. We are talking about US GAAP currently, and operating lease basically currently, and in the books of lessees where we are currently, and in terms of US GAAP is what we are talking. And there are two classifications in terms of US GAAP. One is short term, other one is long term. If it is short term, what happens? We shall discuss that later. But if it is a long term operating lease, treatment is exactly like IFRS, where ROU asset is created, lease liability is created. The only difference is how ROU asset will be treated. सर आप यहाँ पे IFRS IFRS क्यों कर रहे हो सर? वो तो अपने यूएस गैप में भी था ना. यूएस गैप भी तो बोलता है सर सेम चीज की लीज लायबिलिटी रिकॉग्नाइज करो, ये करो. दोनों चीज में हमने सेम ही चीज सीखी ना. हाँ, सेम ही है. तो सेम ही पकड़ो। बट द पॉइंट इज लीज लाइबिलिटी और आरओयू एसेट होगा, तो मैं एल लिख देता हूँ, आरओयू लिख देता हूँ। ओनली डिफरेंस इज आरओयू ट्रीटमेंट। राइट। Okay, sir, fair enough. That's the only difference that is there. Okay, let's go forward. Let us take an example of this. All right, let's go and take an example. Lessee accounting for an operating lease under US GAAP. I hope you understand this is where I am. बार बार मैं repeat नहीं करूंगा. ठीक है? Okay, so let's get started. Sir, there's the same data that we used from previous example. The only difference is that that lease becomes an operating lease. So the lease term is 5 years. 15,000 is the lease payment. 6% is the interest that is there. Present value of lease payment comes to 63,312. That will be recognized as an ROU asset, a lease liability? Yes. Because in terms of operating lease under US GAAP, the treatment remains the same. Okay, sir, fair enough. So that is what would happen. Hold on for a second. Yeah. So, sir, we will recognize the lease liability at the beginning of the year, and the same interest, principal, all of those things will come. The amortization schedule will be the same. Okay, sir, the ROU asset will be amortized on a straight line basis over the lease term? No, it will be treated in an exact same manner as lease liability, meaning whatever is the ending balance for that year of lease liability will be the balance of ROU asset. सर इसके पहले क्या हो रहा था? इन आईएफआरएस व्हाट वाज हैपनिंग? आरओयू असेट एंड लीज लायबिलिटी मूव्ड डिफरेंटली। देखो, अमाउंट डिफरेंट है। देखो, अमाउंट डिफरेंट है। क्या यहाँ पे ये हो रहा है? नहीं सर, दिस इज नॉट व्हाट इज हैपनिंग हियर। व्हाट इज हैपनिंग? दे आर मूविंग इन द सेम वे। दैट मीन्स whatever is the closing balance of lease liability will be the closing balance of ROU asset। ये देखो, 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 ये देखो। Okay, sir, fair enough. We do understand that. Okay, so, sir, how would the treatment happen? Meaning, sir, we understood there would be some, in some ways, income statement and like how would income statement and balance sheet treatment happen? For that, we'll have to lead a bit of theory. In terms of income statement, what will happen? Interest expense and amortization expense of ROU asset are not reported separately. Sir, meaning earlier, you know what was happening? Earlier, you know what was happening in financial lease, in lessee's accounting? ROU asset, amortization expense, and interest expense were shown separately. That means 3,796 and the amortization expense, which was 12,000 something, was shown separately. So interest expense was shown and amortization expense was shown in the income statement. But this time that is not what will happen. This time they both will be shown together. There will be no separation, they will be shown together as lease expense. And trust me, they will always be equal to 15,000. Why? Why? So if you see here, I don't want to complicate things for you further, but if you see here, if you add 3,007, if you see the earlier example that we took for IFRS, if you add these two, you will not always necessarily get 15,000. ये 3,796 and the amortization expense, which was 12,652 per year. You will not get 15,000 every year. बट यहाँ पे आपको 15,000 एवरी ईयर मिलेगा। क्यों? बिकॉज आरओयू असेट इज रिड्यूसिंग इन द सेम वे एज द लीज लाइबिलिटी। लीज लाइबिलिटी कैसे कम हो रहा है? बाय द अमाउंट ऑफ प्रिंसिपल। तो आरओयू एसेट भी प्रिंसिपल के अमाउंट से ही कम हो रहा है। यू कैन सी राइट हियर। सो इफ यू एड द amortization expense plus the interest expense, that comes to the total that total will always come to 15,000 only. So there is no separation that is there in terms of what? In terms of lease expenses. It is directly going to be shown at 15,000 as lease expense. That is the first theory in terms of income statement. Sir, what will happen in balance sheet? Pretty simple, sir. In balance sheet, whatever is going to be the lease liability, ROU asset, their closing balances will be shown. Sir, what will happen in terms of cash flow? the full lease payment is classified as an operating cash outflow. याद करो IFRS में क्या हो रहा था, यूएस गैप में क्या हो रहा था, देयर वाज अ ब्रेकअप. What was paid towards the principal was shown as CFF, and what was paid towards the interest was shown in IFRS as either financing or operating, and in US GAAP as operating. But यहाँ पे ऐसा नहीं होगा. यहाँ पे क्या होगा, यहाँ पे पूरा अमाउंट will be shown as cash flow from operating, cash outflow from operating, right? So under US GAAP, whatever is a operating lease, which is not a short-term operating lease, we will be recognizing a lease liability and ROU asset. Lease expense will be shown in total at 15,000, right? Lease expenses will not be shown separately, and the entire cash outflow will be shown as what? Cash flow from operations, right? All right, सर. सर थोड़ा सर क्लासिफिकेशन में प्रॉब्लम हो रहा है. आप एक बार अच्छे से इफ यू कैन लाइक जस्ट मेक अ टेबल योर so that we are very clear. I'll quickly make that for you guys so that it is easy for you guys to understand and bifurcate these things. एक प्रॉपरली अच्छे से टेबल बनाते हैं एक फेयर में. Alright, let's get started. Guys, there are two types of lease: financial lease and operating lease. Fair enough. Sir, financial lease, sir, lessee's books are going to be made, lesser's books are going to be made. Sir, operating lease, lessee's books are going to be made, sir, lesser's books are going to be made. Okay. Sir, in lessee, we understood the treatment from IFRS perspective and from US GAAP perspective. They both were the same except for the cash flow classification. Okay, sir. Have you understood lesser so far? No, not yet. So we'll come back to that. Come to that later. And okay, sir. Fair enough, sir. All right, sir. When it comes to operating lease, which is not a financial lease, which is where no substantial benefits and ownerships and all of those things are transferred, and we are yet to read the definition. I told you guys that we'll read that later, sir. In terms of that, sir, in terms of US GAAP, we understood that ROU asset and lease liability is recognized, but ROU asset is treated differently. Okay, sir, this is for what? Okay, so hold on for a second actually. Under US GAAP, of course, there are two classifications again. It is a short-term lease and it is a long-term lease. Sir, short-term lease meaning, are remember, in US GAAP, I told you guys and IFRS also that even if it is a financial lease, but the term is less than equal to 12 months, amount is less than, so that becomes what an operating lease. This is what that short term is. तो उसका ट्रीटमेंट अभी तक अपन ने डिस्कस नहीं किया. बट इफ इट इज लॉन्ग टर्म, यू रिकॉग्नाइज ROU asset and you recognize a lease liability, and ROU asset is treated differently. Sir, what happens in the shorter term? That we are yet to discuss, but this is what the treatment looks like for you guys. I hope you guys are clear what is happening where. Quickly, a yes or no in the chat box. And this is a small comparison that I have made, that what would happen with ROU asset and lease liability if the lease was financial lease, if the lease was operating lease under US GAAP. And both, of course, long term is what we're talking, because if it is short term, it is not classified here. It is not treated like this. Not classified here. It is not treated like this. Under US GAAP in operating lease, the principal repayment will be shown under CFF or CFO. That is what I'm trying to make you understand, Parita. There is no difference. That is what my last point was. ये पॉइंट पढ़ो. दिस इज व्हाट द लास्ट पॉइंट वाज. वी अंडरस्टूड ना कि अगर अपना ऑपरेटिंग लीज होता है तो यू आर टॉकिंग अबाउट यूएस गैप करंटली, एंड इन इफ इट इज ऑपरेटिंग लीज एंड यूएस गैप कैश फ्लो ट्रीटमेंट, द एंटायर लीज पेमेंट इज नॉट डिफरेंशिएटेड, इज नॉट सेग्रीगेटेड इनटू प्रिंसिपल पेमेंट एंड इंटरेस्ट पेमेंट. पूरा का पूरा क्या आता है? कैश फ्लो फ्रॉम ऑपरेशंस. द एंटायर ट्रीटमेंट, द एंटायर अमाउंट इज शोन एज कैश फ्लो फ्रॉम operations, right? And this is what it is. This is what has been given here as well. And if you can see right here niche, this is what is done. If you see, this is what is there in our example as well. So I hope you have understood this. There is no bifurcation. But what was happening earlier in terms of financial lease, which was, in US GAAP and IFRS both, we were treating interest expense as a cash flow from financing. Sorry, not interest expense, principal repayment as a cash flow from financing in IFRS and US GAAP, and interest expense in IFRS as financing or operating, and US GAAP operating only. So I hope you remember and understand this. Everyone, yes or no, in the chat box that have you guys understood this, where we are? And I hope this table, via this table, you are able to locate. Via this table, you are able to locate. ये हो गया हमारा हमारा ये भी हो गया. Everyone in the chat box, yes or no, quickly, so that we can proceed. All right, guys. Okay, quickly, I will give you guys a 5 minutes relief. It's 12:14. I'll give you guys a 5 minutes break so that we can get started. Okay, it's 12:14. Take a 5 minutes break. 12:20. We come back again and we finish up completely leases and also the next part, which is the retirement benefit and all of those things. All right, we'll be back with you guys in 5 minutes. All right, I hope you guys are back. Let's get started again and let's move forward and talk about where we were. But quickly, guys, one thing before we proceed. Yes or no? Are you guys with me? Not with me? Just a yes or no in the chat box. Everyone would really appreciate that. There's only one who's answering. Everyone else, come on, guys. Yes or no? There are only two people who've answered so far. So that we can proceed. Sir, so what about IFRS? Sir, what about IFRS, the treatment when it comes to an operating lease in the books of lessee? Uh, okay, what about that, sir? Sir, what about the leases that are short term? Sir, what about that? In IFRS also, sir, we can also segregate into long term or short term. Sir, what about the treatment of all of these things that are yet to be done? We have not yet discussed that. How would the treatment here work? Simply, I would recognize a lease expense. That's it, nothing else. So in our case, I'm paying $15,000. That is what I would recognize as an expense, nothing else in all the ones that I've highlighted as a treatment. Only and only lease expense will come, that too in your income statement, nothing else. That's all. Okay, sir, fair enough. We understand this. Now, what about lessor, sir? We understood lessee's treatment completely in the books of accounts, uh, whether it was a financial lease or operating lease, and we understood every nuance of it. Sir, what about the lessor? If it's a financial lease, what does the lessor do? If it's an operating lease, the lessor do. But before we proceed and we discuss that, let us I have made a comparison table for you guys, which compares what the classification of leases in terms of financial and operating under US GAAP for from the perspective of lessee. So what are we trying to understand, sir? We are trying to understand that how would a lease, I mean, we're trying to understand the comparison, but I'll quickly point out we're trying to understand, sir, lease, if it is classified as financial lease or operating lease, how would the accounting work in the books of accounts of lessee in both the scenarios under US GAAP? So in both cases, ROU asset and lease liability is created, but in case of operating lease under US GAAP, ROU asset will be not amortized on a straight line basis, will be treated exactly like lease liability. In case of operating lease, there is no breakup of interest expense and amortization expense. Entire 15,000 rupees is shown or dollars is shown as what? Lease expense completely. But in case of income statement, there's a breakup. In cash flow statement, interest portion is shown as operating cash outflow and principal statement is shown as the principal portion is shown as cash flow from financing outflow. Where are we talking? We're talking about financial lease. In operating lease, there's nothing like that. Entire amount is shown as cash flow from operations outflow. Right? And this talks about pattern on expense recognition, impact on leverage ratios and stuff, which I think pretty simple and straightforward to understand. Right? Now, let us move forward and let us understand lesser accounting. Okay, sir, is it the same under IFRS and US GAAP? There will be a difference. But again, the start that I've made is IFRS and US GAAP both recognizes that there are two types of lease, financial and operating, which we've been learning so far. Sir, what about the finance lease? Sir, what about finance lease? How do I recognize that? Sir, is the treatment same under IFRS? Is the treatment same under US GAAP? For now, just forget about IFRS and US GAAP. For now, I'll again repeat, forget about IFRS and US GAAP. Right now, let us just understand how exactly a financial lease is treated under the books of in the books of what? Lesser. So what are we trying to understand? We are trying to understand a financial lease and how is that financial lease treated in the books of lesser. So which category we are in right now? So we are in this category. Where is that main thing that I made for you guys? This is where we are. And we have not yet differentiated between IFRS and US GAAP. Right now, I don't intend to do that. Right now, my intention is just to make you guys understand how do we make an account, how do we do that accounting in the books of lesson. Let's get started, guys. So, how would it work? How would this accounting work? Now, remember, from the perspective of lessee, in a financial lease, we say that it is as good as him purchasing the asset on loan. If it is as good as him purchasing the asset on loan, okay, sir, fair enough. We do understand that. Then, from a lesser's perspective, can we say that he is the one who's selling the asset? And for selling the asset, it is providing a finance as well. Uh, we don't get it. So it is selling and it is providing finance at the same time. As good as that? Yes. Okay, it is providing finance as good as that. When we say that, what are we talking about? Is that a type? Is that not? All of those things, let us try to understand and let us try to put everything in perspective. अब यहाँ पे आपको बहुत सारी चीजें मिलेगी. आपको डीलर मिलेगा, फाइनेंस टाइप लीज मिलेगा, डायरेक्ट फाइनेंस लीज मिलेगा, बहुत बहुत सारी सेल्स टाइप लीज मिलेगी, बेसिकली डीलर सेल्स टाइप लीज मैन्युफैक्चरर से बहुत सारी चीजें यहाँ पे डिस्कस कर दी है इन श्वेजर एंड ऑल्सो इन योर नोट्स. सर हाउ एग्जैक्टली टू गो अबाउट इट? मैंने आपको बोला दैट द पर्सन इज गिविंग, इफ यू टॉक अबाउट फाइनेंशियल लीज एंड इफ यू आर समवेयर इन फाइनेंशियल लीज एंड यू टॉकिंग अबाउट फ्रॉम अ लेसीज perspective it is as good as purchasing an asset on loan. So sir, for from a lessor's perspective, is it that the lessor is selling the asset and it is also financing that particular type of the sale? What is that, what is happening here? Yes, that is one of the types. सर क्या बोला सर, समझ नहीं आया सर, बहुत सारी चीजें आपने बोल दी, कंफ्यूजन. लेट अस ट्राई टू पॉइंट आउट. मैंने आपको कंफ्यूज जानबूझ के किया है बिकॉज दैट इज हाउ द होल थिंग इज रिटन डाउन इन योर श्वेजर और इन योर नोट्स. द पॉइंट इज दैट वी आर हियर टू क्लासिफाई द होल थिंग प्रॉपर्ली, राइट? Let us understand the general treatment right now. ओके सर, वी आर टॉकिंग अबाउट, अगेन आई रिपीट, मैं बार बार क्यों आपको क्लासिफिकेशन रिपीट कर रहा हूं ताकि आपके दिमाग में बहुत क्लियर हो. दैट इज वेरी क्लियर इन योर हेड. वी आर टॉकिंग फ्रॉम अ लेसर्स perspective and that too we are talking about financial lease. Sir, what would happen here? In finance lease, the lessee recognizes purchasing an asset. That means lessor should recognize selling an asset because lessee is ultimately purchasing the asset from lessor because it is showing ROU asset. So, is he literally purchasing? No, it is purchasing the right. That means lessor is selling the right. That means as good as there's a sale. So that means as good as sale. That means are you, sir? तो एक मिनट सर, समराइज कर दो एक बार. तो सर, lessee is there, lesser is there, there is lessee, there is lessor. Fair enough. Sir, lessee in financially is recognizing an asset. That asset is an ROU asset. That means this right to use the asset has been sold by lessor to the lessee. So that means lessor should recognize the right, na? Sir, recognize the right meaning? What do you mean by that? Seller has sold the right. That means he should recognize the right and de-recognize the asset. सर पूरा पूरा क्या बोल रहे हो सर, एक बार ट्रीटमेंट समझा दो so that it is clear in our head how the treatment is happening. In terms of finance lease, the initial recognition, how would that happen? As it is treated that lessee is purchasing the asset, that means lessor is selling the asset. That means at the start of finance lease, the lessor will remove the leased asset from its balance sheet because it is selling the asset. Sir, is he literally selling? No. Conceptually, in substance, yes. फेयर इनफ. सो सर क्या करना पड़ेगा? डी रिकॉग्नाइज करना पड़ेगा क्या, जो असेट उसका था इन द बुक्स ऑफ अकाउंट्स. ओके, फेयर इनफ. तो सर असेट तो डी रिकॉग्नाइज कर दिया बिकॉज इट हैज सोल्ड द असेट इन सब्सटेंस, नॉट लिटरली बट इन सब्सटेंस. उसकी जगह क्या रिकॉग्नाइज करने का सर? व्हाट टू रिकॉग्नाइज? द प्रेजेंट वैल्यू ऑफ लीज पेमेंट्स, बेसिकली लीज रिसीव. मैंने बोला था ना स्टार्टिंग में, लेसर ने वो राइट बेचा तो उस राइट को रिकॉग्नाइज करना पड़ेगा। लेसर ने वो राइट बेचा तो उस राइट को रिकॉग्नाइज करना पड़ेगा। व्हाट डू यू मीन बाय दैट? लेसर हैज सोल्ड द राइट, दैट मींस व्हेन ही हैज सोल्ड द राइट, it is going to receive something for selling that right, and it has sold the right for over the years, that means it is going to receive something over the years, that means there should be a receivable that should be recognized. So what should we do in the books of accounts of lesser? In financial lease, sir, we should de-recognize the asset because in substance he's selling the asset, and we should recognize selling the right as lease receivable in terms of present value of the lease payment that he's going to expect out of the lease because he has sold the right for over the years. और मैंने आपको जो स्टार्टिंग में इतना सब बोला ना, वो ये पॉइंट के लिए बोला था। That means in financial lease, the lessor initially will recognize what lease receivable and de-recognize the asset from the balance sheet. And sir, if the lease receivable, that means the present value of lease receivable, if the amount of that is more than the book value of the asset because he's de-recognizing the asset, it is as good as selling the asset. Right. And whenever you sell the asset, what happens? Sir, whenever you sell the asset, whenever you sell the asset, what happens? Sir, whenever we sell the asset is de-recognized from our books and we receive a payment in terms of cash. If payment is not received and somebody owes us the money, then we recognize the receivable from them. Exactly like that, here we recognize the de-recognize the asset and we recognize what a receivable, and whatever the difference is between the receivable that we are going to receive from that particular lease and the asset that we have de-recognized will become my gain or loss. If the present value of the lease payment that I'm going to receive is more than the book value, I gain. If it is less, I lose. And whatever the gain or loss is immediately recognized in the books of accounts and the income statement. सर एक बार एग्जांपल ले लो ना सर, एग्जांपल ले लेंगे तो समझ में आ जाएगा काफी कुछ। Let us take an example. Prime Machines, a lessor, manufactures the equipment and leases one unit to Delta Company. क्या करता है? मैन्युफैक्चर करता है और डेल्टा कंपनी को लीज करता है। दैट मींस दिस लेसर who is also the manufacturer, what who is also the manufacturer becomes what? Becomes the, I mean, Prime Machines, who's also the manufacturer, becomes lesser. My bad, dear. And Delta Company, who has taken the asset on lease, becomes the lessee. सर यहाँ पे एक नई चीज दिख रही है, मैन्युफैक्चरिंग इक्विपमेंट। who's manufactured the equipment? What about that? We'll first discuss that bit also, and then we'll come here. If the lessor is a manufacturer or dealer, the only difference is the sale proceeds are recognized as revenue, the cost of sales is the carrying value of the asset, and this is called as a sales type lease. And we are just talking from an initial recognition perspective right now. तो सर क्या बोलना चाहते हो? पहले एक बार नॉर्मल सिनेरियो डिस्कस कर ले, फिर इधर जाए कि पहले ये कर ले? First, I would want to discuss a normal scenario with you guys. What if this statement was not there? What if this statement was not there? Prime Machinery is a normal lessor who has leased something to Delta Company. So we are talking about normal lease right now. We're talking about what? Normal lease, which is a financial lease. सो वो आपने जो पढ़ाया था, एक्चुअली मैंने पढ़ा दिया आपको। मैंने सोचा कि दोनों एक्सप्लेन कर दूंगा, बट बेटर है कि मैं आपको पहले एक एक स्टेप वील डू वन स्टेप बाय स्टेप। Forget about this manufacturers, the equipment wala part. So the lease term 5 years, payment 12,000 at the end of each year. Sir, rate 6%. Okay. Sir, is the equipment returned to the lessor at the end of the useful life? Yes. The sir expected residual value, sir, unguaranteed. That means we are talking about salvage value, and this salvage value is not guaranteed, and that comes to 3,000 at the end of year 5. And the carrying value of the books in the of the asset in the books of accounts of the lessor is 40,000. Sir, how would the initial recognition happen? We have not yet discussed anything. What happens with lease receivable over the life of over the life of the lease? वो सब मैंने कुछ भी डिस्कस नहीं किया है। मैंने अभी तक आपके साथ क्या ही डिस्कस किया है? सिर्फ I have only discussed the initial recognition, and let us discuss that initial recognition right now. That is what we're discussing right now. So we are talking about a normal financial lease, and we are in the books of what? We are in the books of. We are talking about normal financial lease, and we are in the books of lesser. That's where we are, and we are trying to discuss that right now. Sir, we have understood this that in a lease, which is a financial lease in the books of lesser, sir, whenever lease is done, initially the asset is de-recognized. It is what? De-recognized. So, sir, what will happen? We will de-recognize the asset from balance sheet, and the asset is currently for 40,000. So that will be derecognized. That will be what? Derecognized. Sir, we derecognize this. That means it is as good as we are selling it. Okay. So something that is worth 40,000 we have sold. Against this, what have we received? We have received lease payments. And what do we recognized against this selling? Present value of lease payments in the form of lease receivable. And the present value of lease payment at what? At 6% for the period of 5 years, where the payment is 12,000 each year, will be what? Will be what? Will be somewhere around 50,548. Which will be what, guys? 50,548. Okay, that is what the present value of lease payment is. Fair enough. 50,548 is what the present value of lease payment is. All right. Uh, okay, sir. So what should be the profit or loss? I mean, are we gaining here? Sir, are we losing here? Sir, I don't get it. What's happening? Are we gaining here? Are we losing here? Yes, sir, we are gaining. We are selling something for 50,548 essentially in terms of present value, whose value in my books is 40,000. So it should be 50,548 minus 40,000. But there's a catch here. There's a catch here. Sir, there is a gain ideally, which is of 10,548, but this is not the actual gain. There's a catch here. What is that catch? Sir, there was something that was written there. Sir, we understand this, we understand this, we understand this, but there was something that was written here, which is the residual value that is going to come out of the asset. And it is what? A अनगारंटीड रेसिडुअल वैल्यू. इसका मतलब रिस्क किसका? रिस्क ओनर का, मतलब लेसर का. बिकॉज अगर गारंटीड होती तो किसका रिस्क? इट वुड हैव बीन द रिस्क ऑफ द लेसी, बट इट इज अनगारंटीड. दैट मीन्स इट इज द रिस्क ऑफ लेसर. That means that means when you de-recognize the asset, 40,000 is what the current value is, but you have to consider the salvage value, and the salvage value is going to be received at the end. It is going to be received at the end, so you'll have to take what? The present value of that. That comes to 2,242. That means you will have to, whenever calculating the gain or loss, whenever calculating the gain or loss, directly not subtract from 40,000, take 40,000 after the unguaranteed residual value. And how do you do it? You deduct 40,000 and you deduct present value of the residual, the present value of whatever the residual value is, which is unguaranteed. You deduct for, that from 40,000, whatever amount comes, you take that and then you calculate your gain. So that comes to 37,758. And according to that, you will calculate your gain. That comes to somewhere around 12,790. सर ये सब क्या लिखा है? रेवेन्यू, कॉग्स, ये सब ये डिस्कस करूंगा मैं, डोंट वरी. अभी सिर्फ कैलकुलेशन है तो मैं आपके साथ एक डिस्कस कर रहा हूँ. तो सर 40,000 rupees is what the lease payment, the 40,000 is what the carrying value is, but you do not take the carrying value. You consider the carrying value after the residual value. सर ये माइनस क्यों किया सर? रेसिडुअल वैल्यू वो समझा नहीं. You tell me, who is still the owner of the asset? On paper, lesser. In substance, you have sold it, but on paper, who's the owner? Lesser. Right. So lesser is going to receive a certain amount, which is going to be what? Sir, lesser is going to receive a certain amount, which is going to be 2,242, which is in terms of present value from the asset. Just give me a second, guys. Yeah. So which is going to be how much? 2,242 from the asset in terms of present value. So, sir, from a lessor's perspective, the asset was worth 40,000, but against that asset in the books, I'm going to receive 2,242 in the future. So the true worth of that asset in the books of accounts is 37 something. And then I will use that to calculate my gain or loss initially. I hope you guys are understanding the initial recognition. Sir, what about subsequent recognition? What will happen subsequently? The lessor will use effective interest rate method, which you must have studied in your analysis of income statement, where you will amortize the lease receivable and interest income will be shown. So we understood initial recognition, we understood subsequent recognition. Let us understand subsequent recognition from a calculation perspective as well. You will recognize lease receivable at what amount? Sir, at 50,548, because that is the present value of lease payments. Whose books are we talking about, guys? Again, lesser's books we are talking about. You will recognize what? Present value of lease payment at 50,548 plus. Sir, why are you doing this plus? Remember, as a lessor, you are also going to receive something which is called as the residual value. Because what is lease receivable? The payment that you receive from the asset. And you are also going to receive the residual value. सर वो तो कंसिडर कर लिया ना इनकम स्टेटमेंट में हमने माइनस किया गेन निकालने के लिए. वी हैव ऑलरेडी सब्ट्रैक्टेड दैट. व्हाई आर यू कंसीडरिंग दैट अगेन? उसका गेन तो ऑलरेडी रिड्यूस हो गया. आई मीन उसका गेन कैलकुलेट करने में ऑलरेडी उसको रिड्यूस कर दिया हमने कैरिंग वैल्यू में से. व्हाई आर वी कंसीडरिंग दैट अगेन? अरे इट वाज यूज्ड टू कैलकुलेट द गेन और लॉस. हैव यू येट रिसीव्ड इट? नो. तो दैट रिसीप्ट हैज टू बी शोन ना. Gain or loss computation is done. But have you received it yet? No, that receipt portion has to be shown, and that's where 2,242 you add, your lease receivable becomes 52,790. You will recognize that in your books of accounts. So, sir, we understood initial recognition. If we are talking about a normal financial lease, we are talking about what? A normal financial lease from lessor's perspective. Initially, we de-recognize the asset at carrying value. Whatever the asset was at carrying value, we de-recognize it. So, but here there was unguaranteed residual value. So we have to sort of reduce that from the carrying value. We get 37,000 something something. Okay, we take present value of lease payments. Okay, which becomes my lease receivable. Uh, okay, sir, fair enough. That is what it is. And all right, I take that, and then ultimately, sir, fair enough, sir. I take that, and then ultimately, I calculate my gain or loss, and that gain or loss will immediately go into the books of accounts. So 12,790 was my gain. That will go in my books of accounts, sir. Then I will have to do the subsequent measurement, sir. So my lease receivable will subsequently be recognized. Sir, how will the lease receivable subsequently be recognized? Sir, via effective interest rate method. At what rate I should, at what amount I should show the lease payment, sir, or lease receivable? So 50,548 plus 2,242, which comes to 52,790. All right, fair enough. That is what it would be shown at. Uh, and I would subsequently show it via effective interest rate method. So, sir, how would that work? 52,790 is what? Is the opening balance of my lease receivable, which is a asset. Imagine you have given a loan. Now, on this loan, at the rate of 6%, this is the interest that you are owed. But you have been given how much? 12,000. That means the remaining amount was the principal that is given to you by the person who has borrowed the money from you. So 8,833 becomes the remaining amount. So lease receivable will be reduced by that remaining amount, which is in short principal repayment. So this was owed at the start of the year. This is owed at the end of the year. Same you will do for the rest of the 5 years. Okay, sir, fair enough. In income statement, then what will happen? In balance sheet, what will happen every year? Initially, in income statement, what happened? Initially, in income statement, that gain or loss came. This was initially. Then what will happen every year, sir? In first year, second year, third year, fourth year, fifth year. Sir, what will happen every year then? In income statement, you will show something which is called as an interest income. This will become your interest income. This will become what? Your interest income. 3,167, 2,637, 2,076, 1,480, 849. All of this becomes your interest income every year. तो इनकम स्टेटमेंट में each year you will recognize interest income. Gross profit from the sale, which was initially recognized. It is sale type lease क्या होता है अभी तक मैंने डिस्कस नहीं किया. We'll have a discussion around that. Don't worry. Balance sheet, sir. What will happen in balance sheet? Lease receivable will keep on being shown at the table values. And in cash flow statement, every year, whatever you're receiving as Cash inflow will be shown as what? Operating cash flow. Whether you are following US GAAP, whether you are following IFRS. The lease rent that is received will be shown as cash flow from operations, whether you are following IFRS or US GAAP. दैट मीन्स मैंने आपको स्टार्टिंग में बोला था ना सर यहाँ पे तो मैं ट्रीटमेंट डिफर कर भी नहीं रहा हूँ द ट्रीटमेंट मैंने मतलब बताया भी नहीं यूएस गैप है आईएफआरएस है नथिंग आई जस्ट आस्क्ड यू गाइस टू इनिशियली रिमेंबर दैट वी आर जस्ट ट्राइंग टू अंडरस्टैंड द ट्रीटमेंट ऑफ अ फाइनेंशियल लीज इन द बुक्स ऑफ लेसर द ट्रीटमेंट इज द सेम एवरीथिंग इज द सेम ओके सर तो वी स्टार्टेड विथ व्हाट Sir, we started with what? We started with understanding, sir, financial lease, how would be recognized in the books of lessor. So the treatment is the same in IFRS and US GAAP. Sir, how would initial recognition happen? How would subsequent recognition happen? Sir, initial recognition, I will recognize a gain or loss. Sir, gain or loss, why? Because it is as good as selling the asset. So, sir, asset will be removed from a books of accounts at the carrying value. Sir, what was going to be shown as the gain? Sir, whatever the lease receivable is going to be. I mean, what is going to be shown as the amount that I'm receiving? Lease receivable, right? Sir, whatever the difference, gain or loss, initially will be going in the income statement. Every year I will use effective interest rate method to recognize the lease receivable, right? That is what will happen. And whatever the income is that I am earning in terms of the amortized the amortization table in interest income, it would not be called as an amortization table, but whatever interest income that I'm sort of generating from that will be shown in income statement and cash flow statement, sir. Whether it is IFRS or US GAAP, treatment remains the same. Entire lease rent will go under cash flow from operations. Okay, sir, fair enough. Sir, right now we just spoke about normal leases. Sir, what if I'm a manufacturer or dealer? What if I'm a manufacturer or dealer and I have given the same financial lease, but this time I'm manufacturer or dealer? What about that time, sir? Then I will follow this solution. Everything remains the same, only a few things will change. I am here a manufacturer of the equipment. That means this type of lease will be called as what? Sales type lease. मतलब एक मैन्युफैक्चरर ने या डीलर ने हु मैन्युफैक्चर्स द मशीन और उस डीलर इन द मशीन rather than selling the machine outright rather than selling the machine outright essentially is doing what is getting EMI for that machine. What, guys? I'll again repeat, rather than selling the machine outright is receiving what? EMI for the machine. And the difference, which was the initial gain or loss, will be calculated as what? Will be calculated as COGS. So whatever is the present value of lease payments, whatever is the present value of lease payments, which is 50,548, is shown as revenue. Is shown as revenue. That means in the year one itself, rather than waiting for 1, 2, 3, 4, 5, entire 50,000 will be recognized as what? 50,548 will be recognized as what? Will be recognized as revenue. Sir, what is COGS then? Sir, what is COGS? COGS becomes what? COGS becomes my whatever is the value of inventory, whatever is the value of inventory or cost of inventory, which is 40,000 minus the present value of unguaranteed residual payment, which is 2,242. That comes to how much? 37,758. Exactly like how we did. But this becomes your COGS, cost of sales. And your gross profit in the books of accounts will come at 12,790. Entire 50,000 will be shown as revenue. This will be shown as what? This will be shown as COGS. Sir, how different is it from what we did earlier in normal? In normal, we just calculated the gain or loss initially, and whatever was the amount which was receivable was shown in effective via effective interest rate method. यहाँ पे हम लोग क्या कर रहे हैं उतने अमाउंट को रेवेन्यू बता रहे हैं विच इज द अमाउंट दैट इज प्रेजेंट वैल्यू विच इज रिसीवेबल रिमेनिंग बिकम्स द कॉग्स एंड देन वी प्रोसीड फर्दर because we have the gross profit. Okay, sir, fair enough. That's fine, we get it. Sir, but the revenue that we have recognized, have we received that revenue yet? No, sir, we have not received 50,548 completely yet because that is our revenue. We are going to receive that over the next 5 years. That means what? That means I have sold on credit. And if you have sold on credit for less than 12 months, there would be no interest portion. But because you have sold for more than one, for more than, I mean, the amount that you're going to get in terms of revenue is going to be for, is going to be over 5 years. That means there's going to be some interest portion. So basically, sir, what are you trying to tell us? Whatever is the receivable for the amount that you have earned in terms of revenue, that receivable that you have earned in terms of amount for the revenue will be shown via effective interest rate method where interest income will come and all of those things will happen exactly like that. तो ये रहा पूरा पूरा amortization schedule exactly like that. कोई भी difference नहीं है. Right, no difference at all. And that is the difference between your sales type lease and normal lease. In a sales type lease, where you are a manufacturer or a dealer, you recognize revenue and COGS and then you proceed further. Whatever the difference between revenue and COGS is, becomes your gross profit. Revenue is shown in your books of accounts, COGS is shown in your books of accounts. Ultimately, gross profit is arrived at. In a normal lease, sir, what happens? Sir, ये revenue, COGS ये सब नहीं बताते. हम normally बस asset को de-recognize करते हैं. Whatever we receive is the lease receivable that we have. Whatever the difference is becomes by gain or loss. It is as good as selling an asset. So this is as good as selling an asset. And this is as good as selling an asset in the regular course of business. In the regular course of business. No difference except for initial recognition. Except for initial recognition, there is no difference at all because eventually there will be a lease receivable in both the cases. Because here in sales type lease the person is given on essentially has given on EMI, and in the other case whatever is going to be received in normal is going to be received over the next 5 years, so it is as good as the person owes you money over the period of 5 years. Sir, both same ही है sir, कुछ खास difference है नहीं. I don't want to create more difference and sort of confuse you guys, but the point is कि sir second जो है आपका जो amortization schedule है वो same बनेगा, no difference at all, right? एंड दीज द टू टाइप्स ऑफ लीज, और ये रही आपकी दो टाइप्स ऑफ लीज जो हम लोगों ने ऊपर स्टार्टिंग में रिकॉग्नाइज की थी. सर, वी डू अंडरस्टैंड सर दैट सेल्स टाइप लीज इज अ स्पेशल केस वेर यू आर अ मैन्युफैक्चरर और डीलर, where it is as good as you are trying to sell an inventory. Sir, what about direct finance lease, which is another special type of case? Sir, what if you are talking about a direct finance lease? What would happen there? What is a direct finance lease essentially? Currently, we are discussing the special cases, guys. Currently, what are we discussing? We are discussing the special cases. And what happens in terms of special cases? We are discussing the third type, and not, I think, तो normally तो मैं इसको type नहीं बोलूंगा actually. The second type of special case, this was the first one. The second type of special case is you are not a manufacturer, you are not a dealer, you are a financer. You are what? A financer. You give things on EMI. That is what your job is. You are not a manufacturer. You are not manufacturing things. You're not a dealer. You are not somebody who's buying from somebody and then selling it to you, but selling it to you essentially on credit for 5 years. You're none of that. You're just a person who is providing financing. So providing financing matlab you're facilitating the EMI. Sir, matlab imagine you're a bank. A person comes to you and tells you that, listen, I want to buy the machine. You say, okay, and you give him an EMI option. Okay, so sir, are you not a manufacturer? No. Are you not a dealer? No, but you're providing that EMI option to that person. Sir, how are we providing the EMI option? I don't get it. We get the asset in our name and then we provide the EMI option. For simplicity, understand it in that way. सर, तो सेम ही हो गया ना सर, मैन्युफैक्चरर भी है वहां पे, डीलर भी है सर, वो भी तो ओन करते थे असेट, उन्होंने भी तो दिया, यहाँ पे भी तो बैंक है, वो भी तो वही कर रहा है. अरे, आई एम ट्राइंग टू मेक यू गाइस अंडरस्टैंड दैट दीज आर थ्री डिफरेंट पीपल. And how the recognition of initial profit and loss will depend upon where you are. If you're a manufacturer or dealer, or if it's a normal financial lease, then initial profit or loss will be recognized initially only, upfront. But whenever you're a financer whose job is financing, your initial profit and loss will be not recognized initially. It will be deferred. So it applies when the lessor is a financing company. What it applies when the lessor is a financing company, he's not a manufacturer, he's not a dealer, and there is no gain or loss that is recognized upfront. This gain or loss that happens upfront, you still calculate it. Sir, calculate तो फिर भी करेंगे. You will still calculate it. It is deferred. When over the lease term. Sir, meaning sir एक बार बता दो ना sir. Can we do a calculation out of it? Let's do a calculation. Let's do a calculation. There's a company called Premium Machines Limited. He's a lessor. Leases a piece of manufacturing equipment to budget tools for 4 years. Okay. सर 4 साल के लिए लीज पेमेंट एवरी ईयर 10 years 10,000. Sir, useful life of the asset is 4 years. Sir, as good as the useful life, finance lease is what we're talking about. Okay. Salvage value 2,000. Okay. Carrying value of the equipment 30,000. Excuse me. Carrying value of the equipment, sir, it is 30,000. Depreciation straight line for over 4 years. There is no other operating cost. Sir, whose books are we talking about? Talking about इससे ना lesser accounting for an operating lease में आ गए क्या हम लोग? एक मिनट, मैंने एग्जाम्पल सही नहीं लिया. एक मिनट, रुक जाओ रुक जाओ रुक जाओ रुक जाओ रुक जाओ. Hold on, hold on, hold on, hold on, hold on, hold on. Sorry guys. एक मिनट रुक जाओ. My bad. Let us understand the difference. Sir, how would the difference be in terms of what? In terms of my second type of finance lease, which is second type of lease, which is direct financing lease. Sir, what would the difference be? ये सब जो इनिशियल रिकग्निशन दिख रहा है ना आपको, ये सब जो यहाँ पे, ये सब कुछ नहीं होगा. None of that would happen. So this 12,790, which is the upfront profit or loss, in our case, it's a profit. So how would that be recognized? How would that be recognized? How would that be recognized? Sir, we will take present value of lease payment. Basically, we are talking about lease receivable. We are talking about lease receivable. We will take present value of lease payment. We will add what? We will add the unguaranteed residual value, and we will add the initial gain or loss. And this entire lease receivable will be amortized exactly via the effective interest rate method. Exactly via the effective interest rate method. तो एक बार सर समराइज करा दो हो क्या रहा है सर प्लीज. लेट अस ट्राई टू अंडरस्टैंड द होल थिंग. सर वेर आर वी? सर वी आर टॉकिंग अबाउट फाइनेंस लीज. वेर आर वी आर टॉकिंग अबाउट, होल्ड ऑन फॉर अ सेकंड. कहाँ गया अपना मेन टेबल? Yes. Where are we? We are talking about finance lease and we are talking from the perspective of lessor. Sir, is there any difference between IFRS, US GAAP? There is no difference between IFRS and US GAAP. Everything remains the same here. Okay, sir, there is no difference is what you're saying between IFRS and US GAAP. Okay. Sir, what are the different types of finance lease that are there? First, you're talking about the normal finance lease. First, we are talking about the normal finance lease. So when we talk about a normal finance lease, what happens? It is as good as you selling the asset. When you sell the asset, you de-recognize the asset. Sir, whenever we de-recognize the asset, fair enough, sir, we have de-recognized the asset. Sir, sir, we are normally selling the asset, so we get some cash or somebody owes us the money. Exactly like that, something will happen here. Where what? We de-recognize the asset and we create a receivable. And whatever the difference between receivable and de-recognized value is of the asset carrying value, and if there's unguaranteed residual value, you consider that as well. You calculate the gain or loss. Sir, the gain or loss goes initially in the income statement. Sir, what about the receivable that I'm going to get? Sir, what receivable? Are the money the person that owes? Okay, sir, we will use that and we will create a effective and we will create an amortization table where we will use effective interest rate method and we will create interest income or recognize interest income every year via this amortization table. All right, sir, fair enough. That is what we'll do. Fair enough. We understand that. Sir, what about sir? What about the second case, which is the first special case where we are a manufacturer or dealer. Sir, earlier to we were a normal lesser. We were what? A normal lesser. Okay, fair enough. We are a normal lesser. So there was no this was normal accounting that we did. Sir, but what if we are a manufacturer or dealer whose main job is to sell machines? But this time he has sold machine in the form where he's selling and he is, sort of recognized a lease. Okay, fair enough, sir. In a manufacturer or dealer, what do? We recognize the initial recognition that will happen will be a little different here. Sir, how would initial recognition happen? The present value of lease payments will be shown as will be shown as revenue. Okay, sir, the cost of sales that is there, uh, which is, I mean, we'll show cost of sales, which is we'll show COGS, which is going to be what, sir? Which is going to be, sir, the value of the inventory in my books of accounts, which was 40,000, the carrying value. We'll consider unguaranteed residual value exactly like that, and we'll calculate gross profit. So what about for the rest of life? It will be the same as what we do in a normal case. Okay, sir, the second type of special lease is, sir, what if I'm a financer? I'm not a normal lessor. I'm not a manufacturer. I'm not a dealer, but I'm the one who's financing. Sir, what then if I'm the one who's financing? Sir, in that case, the initial recognition would still be calculated in terms of gain or loss. But you know what? Uh, uh, sir, we will not recognize it. Sir, initial recognition will be calculated, but we will not recognize it. अरे calculate करो gain or loss क्या हो रहा है? Calculate the gain or loss, but don't recognize that gain or loss how you would in the first two things that we studied. तो क्या करना चाहिए सर फिर वो gain or loss का? What do we do of that gain or loss? In essence, sir, in that case, the gain or loss that is there will be deferred. सर व्हाट डू मीन बाय डेफर्ड? अरे लीज रिसीवेबल दिखा रहे थे. लीज रिसीवेबल में क्या क्या दिखा रहे थे? प्रेजेंट वैल्यू ऑफ लीज पेमेंट्स प्लस अनगारंटीड रेसिडुअल वैल्यू प्लस यहाँ पे एक चीज बढ़ जाएगी, विच इज गोइंग टू बी द इनिशियल गेन और लॉस. इफ इट्स एन इनिशियल गेन यू एड इट, टोटल अमाउंट लो, और वो जो टोटल अमाउंट आ रहा है उससे क्या बनाओ? ये पूरा स्केड्यूल बनाओ. द टोटल अमाउंट वट एवर द अमाउंट इज, मेक द एंटायर स्केड्यूल. वेल यू शो ओपनिंग बैलेंस, देन यू गिव इंटरेस्ट इनकम, then you sort of make the lease payment, and then whatever the principal repayment is difference ending lease receivable, you keep deferring that. Or interest income as usual will go where? Will go in your P&L, and that's how lessor will recognize the entire financial lease. IFRS US gap, no difference. Sir, what about a lessor? How would a lessor recognize an operating lease? I mean, how would an operating lease be recognized from a lessor's perspective? What would happen there, sir? How would this whole thing function? It's pretty simple. He will not de-recognize the asset because it is an operating lease. No substantial risk and reward is transferred. So if that is not the case, he still remains the owner, then what? Depreciation expense will come? Yes. तो depreciation expense आएगा? हाँ सर. बस जो भी उसको लीज रेंट मिल रहा है या लीज मिल रहा है, वट एवर द लीज पेमेंट इज, दैट विल बी शोल्ड एज अ रेंटल इनकम इन हिज बुक्स ऑफ अकाउंट्स इन इनकम स्टेटमेंट. तो प्रीमियम मशीन विच इज वन ऑफ द लेसर्स is rented manufacturing equipment to budget tools for 4 years. The life of the asset is 4 years. Wait, hold on. We're talking about lesser accounting from an operating lease. Guys, make this life of the asset. I think life of the asset should change. This example, there's a mistake in the example. The life of the asset should change. क्योंकि अगर ये चार होता तो और ये भी चार होता तो obviously it would not qualify as an operating lease, right? So let's make the useful life of the asset at 10 years. वैल्यू कितनी है? लीज पेमेंट्स 10 है, कैरिंग वैल्यू 3000. ओके, राइट सर, वी मेक इट 10 years. The salvage value is 2000. Carrying value of the equipment at the start is 30,000. Depreciation will be straight line over a period of 10 years. There is no other operating cost. What would happen? Sir, every month, every year, we will get 10,000, we will recognize as a rental income, right? Do we de-recognize the asset? No. Do we still own the asset? Yes. Do we recognize the depreciation expense for that asset? Yes, because we still the owner. And owner will recognize the depreciation expense. And we'll still continue to recognize the depreciation expense here. How would the depreciation expense be recognized, sir? 30,000 minus 2,000, which is the salvage value, divided by 10 years, that comes to 20 divided by 10, 2.8 thousand every year. So this will be 2.8 thousand every year. Like, So here, for the first 4 years, you will see revenue, and the depreciation expense will be 2.8k, 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 and ultimately you will get a profit, right? This is your income, this is your expense. So you will sort of, this is the difference that you're essentially, this is what the profit is every year that you're recognizing, right? Because 10k is for the first 4 years. बाद में तो 2.8 के expense ही आता रहेगा. This is your income, this is your expense. तो आपने कितना net income recognize किया is what they're trying to tell us. All right. What will happen in balance sheet? Balance sheet, the asset will keep on depreciating, and not over 4 years, but over 10 years. And what would happen in cash flow statement, sir? In cash flow statement, entire 10,000, which is the lease rent that we are receiving, will be shown as cash flow from operations, whether you are following IFRS or whether you are following US GAAP. Right? And there is no CFI, there is nothing. Because why? Because you're not selling the asset. So, sir, here as well, IFRS, US GAAP, the treatment remains the same. Pretty simple, easy to understand. So, lesser IFRS and US GAAP, same, right? Same as well. And we've done all the treatments when it comes to leases. I hope you guys are with me so far, yes or no, so that we can move forward and understand the last bit of this chapter, which is to do with retirement benefits, pension plans, retirement benefits, stuff like that. Any doubts so far, guys? All right, let's move forward, guys. Let's talk about pension plans now. There are two types of pension plan, guys. First is your defined benefit plan, and the next one is what? Your defined contribution plan. Defined benefit, you guarantee the benefit. Defined contribution, you only are liable to contribute, right? Sir, defined contribution plan is a contribution plan where you are just liable as an employer just to contribute for the retirement of the employee. So whatever is the fund that is taking care of the employee, you as an employer just have to contribute to that. Now your job is done. Sir, what is this contribution that the employer makes to the fund which takes care of the employee's retirement? What is the contribution based on? It is based on a lot of factors: years of service, employee's age, compensation level, profitability, percentage, of employees' own contributions, whatever that may be, right? Here, sir, the employer's job is just to contribute. He doesn't guarantee on the future value. He doesn't care about what happens in the future. His job is just to what? Is just to contribute. Then, sir, if his job is just to contribute, after a contribution, whose risk is going to be? Sir, what do you mean by risk? What happens to the funds that are contributed by the employer to the fund? Whose risk is going to be about, with respect to what happens with those funds? So you're talking about investment responsibility? Yes. What happens with that investment is whose responsibility, sir? It is responsibility of employee. That means he assumes all the investment risk. Sir, how would accounting happen? From an employer's perspective, how would accounting happen? Sir, whatever he is contributing to the fund is the expense, so should be shown as expense. Sir, apart from that, would there be some liability that would be created from an employer's perspective? No, sir, no liability will be created because once he has contributed, there is no liability that remains for him. Of course, sir, if he's not contributed, then you have to sort of show a payable. And all the investment risk and everything is borne by the employee. ये तो बहुत simple है, इसमें कुछ भी नहीं है. Very, very simple, easy to understand. Right? And there's an example also which I don't think I need to sort of discuss with you guys. Very simple and easy, straightforward. Sir, but what about defined benefit plan? सर व्हाट अबाउट डिफाइंड बेनिफिट प्लान? और इसमें इतना सारा थ्योरी है सर, इतनी सारी अकाउंटिंग है सर. इट्स अ बिट लाइक वी आर सर लिटिल कंफ्यूज विद रिस्पेक्ट टू दैट because of how things are shown. Like, Shwezar sort just discusses the theory of it. Like, I think also one more thing guys, this is going to be discussed in greater detail in your level 2. तो ज़्यादा कैलकुलेशन में मैं यहाँ पे आपकी जगह होता तो नहीं घुसता, बट राइट नाउ आई हैव टू एक्सप्लेन टू यू गाइस, सो आई हैव टू एक्सप्लेन वाई कैलकुलेशन, सो आई मेक श्योर दैट आई एक्सप्लेन यू टू यू वाई कैलकुलेशन. But what is defined benefit plan, sir? In defined benefit plan, employer makes a contribution to the fund, but now this fund is owned by the employer. Sir, he makes the contribution to the fund is owned by the employer. What are you trying to tell us? You know what? In defined benefit pension plan, the employer guarantees a benefit, a fixed benefit to the employee after retirement. वो बोलता है कि इतना पैसा आप आफ्टर रिटायरमेंट एवरी मंथ और एवरी ईयर वॉट एवर दैट मे बी आई विल गिव यू. Employer is guaranteeing the benefit, not the contribution. He says that I am guaranteeing you the benefit. That means he has to make sure that tomorrow after his retirement, he pays the employee that benefit every month or every year. For that, he will have to make arrangements from today itself. He doesn't cannot wait till retirement. What will he do? He will make contributions. He'll create a fund. He will make contributions and manage that fund so that tomorrow this fund, when it matures, not matures, this fund should be capable enough to pay the employee every month the amount that it is owed to him, owed to that employee by the employer. Okay, sir, we get a gist and a preview of how does a defined benefit pension plan work. All right, fair enough. We do get that. Uh, okay, sir. In this, there's a promise that is going to make a periodic payment, to the employer after retirement. We do understand. So, on what basis is this retirement benefit calculated? Example can be years of service and final salary. Let's say for example every year I will pay the employee 2 years of service into final salary into into 2%. So 2% into final salary into years of service. So if the person has, let's say for example I'm going to pay after retirement, has served 20 and 20 years and 40,000 was the benefit that was his final salary, before he retired or before he sort of left the job. Okay, so the amount of benefit that I'm going to pay him every year is going to be, so 2% of 40,000 that comes to, so 1% is sort of 10% is 4,000. So 400, 800 into 20, that comes to how much? 16,000 somewhere around. I think, don't quote me on this exactly in terms of maths, but 16,000 every year is what I'm going to pay. So here, what have I done, sir? I have guaranteed a benefit to the employee. Okay, fair enough. Sir, here the risk of the investment is going to be of whom? Sir, what do you mean by investment? Obviously, employer is not going to wait till the very end, basically till the retirement of the employee, and then pay him the money every month. He has to make the arrangements today itself because it's a liability. He cannot wait till the end. Obviously, the arrangement today itself, he's not going to exactly invest the amount that is required to be paid to him. He's obviously going to invest in terms of present value, and he's going to remove in terms of present value. The amount that he's going to receive is going to set aside is going to be in terms of present value. Sir, what will do with this amount? He will create a fund and he'll put it there. So what will the fund do? Fund will obviously invest it in the market so that it can earn a return and eventually, you know, pay the employee. Fair enough. So the risk of the investment remains with whom? Sir, employer, because he has guaranteed the benefit and not the contribution. He's saying that I'm going to pay you the fixed amount. So tomorrow the investments that the employer has made, and if the investments don't do very well, and in fact they make suffer losses, sir, would the employer still have to pay to the employee every month the fixed benefit, every month or every year, whatever that may be? Would the employer still have to pay? Yes. And funding happens via different trusts. Exactly. Sir, there's a complexity here. You guys would have understood this. What? How much to contribute will depend on how much to pay, and how much to pay in the future depends upon how much the employee serves you, how much the employee is going to live, what mortality is going to have, what age he's going to retire, whether he's going to remain with me till the retirement or he's going to retire early. All of this I will have to estimate so that I can understand today how much do I have to contribute. So you contributing to the plan or the fund, by plan I mean the fund that you have created to pay the employees, it depends upon a lot of factors. For how long the employee is going to stay, what is the future compensation that he might have, Because if you think that he's going to be there till retirement, then you better start making the arrangements for that from now. So if you think that he's going to make till stay till retirement, then you sort of have to estimate what the final salary would be. If he's going to stay till retirement, what the retirement age would be. If he's going to stay till retirement, what sort of a number of years he's going to live after retirement. You'll have to estimate all of that to be able to calculate what should the contribution that you should, what provision that you should start making today itself. If you think that he's not going to stay till retirement, you'll have to estimate that till what age he's going to be, till what time he's going to be. At that time, what his final salary would be. All of that depends upon employer turnover. That 10% attrition rate is there, so we think that 10% of the employees don't last for more than 5 years, stuff like that. All of those things you'll have to estimate. I hope you guys understand the complexity that you will have to go through to be able to calculate what should the contribution be. Right? So it depends upon future compensation levels, employee turnovers, retirement age, mortality, discount rates, so many things. Because discount rates tomorrow, if the discount rates are very high, that means you will have to sort of remove only a lesser amount. I mean, the amount that you have to contribute today will be less because the present value will be less. So it depends upon a lot of factors, right? So the plan, basically the fund that you have made, will have your contributions, and you will invest those contributions in the market so that tomorrow when the employee retires, you're able to pay that employee, right? So every year you will keep on making contribution. Every year your investment will perform a certain way, and every year your asset will reach a certain amount. Okay, sir, fair enough. We do get that. That means every year, at the end of the year, we will be able to calculate what sort of assets our fund has. Yes. How are we going to be able to calculate that? Arey, sir, we know the investment that we have made. What is the value of that investment? The contributions that we have received in total, what together, what do they, come to in terms of the amount? So we can calculate the assets. Every year, do we know the kind of obligation that we have in terms of present value? Yes. So what do you mean by obligation? The amount that we might have to pay when the employee retires. So every year we'll know what is the assets that we have and what is the obligation that we might have to incur. And if the assets are more than our obligation for that year, if, let's say, for example, I'm talking about the year number 5, if my assets are more than my obligation, that means my plan is overfunded. I have net pension assets on balance sheet. Sir, net pension assets on balance sheet, what do you mean by that? Who does this fund belong to? The company, employer. Employer will have to show the investments and the contribution, basically the plan assets in the section of assets, and the plan liabilities in the section of liabilities, because that is a liability. And you know what? You don't separately show them. You net them and you show them. Basically, plan assets minus plan liability, that means you have what? More assets than the liability. That means you have net assets. So if your plan liability is 1,000 and your plan assets are 1,200, that means in net you have 200 rupees more assets. That means you will show net 200 in your books of accounts. And for that year, what will happen? Nothing will be shown in liabilities. But sir, what if liability is more than the asset? That means your plan is underfunded. Sir, that means, sir, what will happen if this was the other way around? This was 1,000 and this was 1,200. What would have happened? You would have shown a plan liability of 200 and nothing would have come here. So I hope you guys understand what do you mean by overfunded and what do you mean by underfunded. Okay, sir, fair enough. We do get that. Sir, my plan assets were of a certain amount at the start of the year. I'm trying to calculate what is the interest that I should be earning on them. Can I do that? Yes. Sir, what do you mean by that? What are you trying to tell me? I'm talking about the net interest expense and income. What am I talking about? The net interest expense and income. Meaning, let's say, for example, I'm talking about first year and I'm standing at the end of not first year actually. We'll take We'll take third year, and I'm standing at the end of third year. Obviously, the plan assets that you have at the beginning of third year that will earn a certain interest for you, let's say 6%, that will become your interest income. So obviously, the plan liabilities that you have for that year at the beginning of the year will come closer, will come closer to what? Will come closer to maturing by 1 year. So if the interest rate is 6%, that means whatever is the opening plan liability into the 6%, which is the interest rate, becomes your interest expense for that year. Why? Because slowly, your present value is moving towards its maturity because you took present value of plan obligations or plan liability. It is slowly going to move towards its maturity. The moment it moves towards its maturity, it will keep on increasing its value. And that increase is called as interest expense. And you know what? Like how you used to net plan assets and liabilities, exactly like that, you will net interest expense and income. You will net what? Interest expense and income. Meaning, sir, my interest expense like that comes to 2000 and my interest income is 1500. That means I have a net interest expense of 500 and that is recognized in the income statement. Okay, sir, fair enough. So, do we understand this? So, what do you mean by service cost? Every year an employee works for you, he earns more retirement benefits. Meaning, every additional year he keeps on working, you do what? His retirement benefit keeps on accruing. He earns more and more retirement benefit. That is called as service cost. Sir, meaning, if I am estimating that the employee is going to retire after 20 years, if I'm estimating the employee is going to retire after 20 years, okay, sorry, sorry, yeah. If I'm estimating that the employee is going to retire after 20 years, every year he works for me, he keeps on getting more and more benefit in the form of, sir, in the form of, remember the equation that I wrote at the start for defined benefit plan? ये देखो, 2% into final salary into years of service, which will finally I will be paying to him that much. सर ये आपने लिखा 2% into 20 into 40,000 which is 16,000. ये आपने बोला कि इतना पे करेंगे बाद में, बट उतना प्रोविजन आप आज से बनाने लग जाओगे क्या? नो, यू विल नॉट मेक दैट मच प्रोविजन फ्रॉम टुडे इटसेल्फ. सर मीनिंग, for every year of service he incurs, you will create a service cost. एक साल काम किया सर्विस कॉस्ट बढ़ा, एक साल काम किया और सर्विस कॉस्ट बढ़ा, एक साल काम किया सर्विस कॉस्ट बढ़ा. बट सर आपने बोला था ना कि यू हैव टू एस्टिमेट व्हेन ही रिटायर्स. अरे वो एस्टिमेशन क्यों करना पड़ेगा प्रेजेंट वैल्यू निकालने के लिए? You will have to estimate when he leaves. You will have to do all of that for calculating the present value. But this bit that every year that he works for you, he will earn more and more retirement benefit. And guys, it is not a cost that you're going to, just because you're going to pay at the end after he retires, that is not the cost or that is not an expense for that year. It is an expense for this year. Why? Because he has earned it in this year. And we follow what concept? Accrual concept. And what does accrual tell us? Accrual tells us a very simple thing that recognize the expenses when incurred and not when paid. आप पे बाद में कर रहे हो बट वो करी सर्विस कॉस्ट आप आज इनकर कर रहे हो. दैट्स व्हाई इट शुड बी रिकॉग्नाइज्ड टुडे इटसेल्फ. Right? That is what this is. And obviously, if it is a cost, it is going to be recognized in the income statement. Sir, what do you mean by remeasurement then? Remeasurement is what? Guys, obviously, you will have to assume so many things. You will have to assume so many things. When does he retire? All of those things. ये assumptions कौन करता है? Actuaries वाले लोग करते हैं. You don't do it. You don't have expertise in it. Obviously, sir, what if one of the assumption changes? Something happens to that assumption. some changes happen. And because of that, there's a gain or loss. Sir, meaning because of change in assumption, what happened was my plan liability went up and my plan assets were the same. Now, because of that, it obviously, if plan liability goes up, there's a loss that is incurred. Sir, because of one of the remeasurement, my plan liability remained the same, my asset went up. That means there's a gain. This is called as actual gain or loss. That is one remeasurement. Sir, we calculate the interest expense, we calculate an interest income, uh, which was on the opening balance. So my interest was rate was 6%. On opening balance, I calculated expense, I calculated income. We get that. Fair enough. All right. Sir, but isn't that expected? Why? Am I going to earn that much actually? Not necessary, sir. Sir, meaning of what if plan assets actually earn more than 6%? 6% is what you're estimating. मैंने वो बताया नहीं था आपको स्टार्टिंग में. Confusion create होता. ये जो discount rate मैंने बोला ना, this is an estimation that you will earn 6% every year. But what if you don't actually? What if you earn more than that? Because your assets are not going to only be invested in equity in bonds that are going to be invested everywhere. So you might earn a lot more than 6%. This 6% is just an estimation to calculate your expected interest income, expected interest expense. सर इंटरेस्ट कहाँ से आया सर अगर आपने इक्विटी में डाला तो अरे समझ लो ना एक फ्लैट अमाउंट कमा रहे हो डिविडेंड भी हो सकता है. The point that I'm trying to make is all of that was estimated, but what if actually you earn different than that? Then what, sir? Then you will have what? A difference between what you actually earn and what is your expected return. And that difference is also called as remeasurement. हम लोग क्या पढ़ रहे हैं remeasurement. हमने सबसे पहला actual gain or losses, and the difference is also called as the difference. That difference is between the expected and plan assets. The return of plan assets is also going to be accounted for. सर कैसे सर क्या होगा सर ये रीमेजरमेंट क्यों बोलते हैं समझ में नहीं आया एक बार. नाउ वील टेक एन एग्जांपल एंड वील स्टार्ट डिस्कसिंग IFRS. The example with in the context of IFRS, and then we'll come back to this. I'll make you guys read the theory again. First, we'll read the example with respect to IFRS, and then we'll come back to this. All right. But before that, give me 2 minutes. I'll be right with you guys. Yes. All right, guys. Let's get back to what we were discussing. All right. Now, guys, we will understand this whole example. Which one? How does accounting work in defined benefit pension plan in IFRS? Let us take an example. We are talking about IFRS, where the defined benefit obligation is 8 lakh. What are we talking about, sir? Plan liability. The plan assets fair value is 7,50,000. When at the start of the year, that is at the start of the year, t equal to 0, whenever the year starts, not literally 0, but whenever the year starts, my plan liability is this and my plan assets are this. Sir, what does that mean? That my liabilities are more than my assets. That means the plan at the start of the year is underfunded. All right, sir, fair enough. Discounting rate is how much? 5%. This is estimated, guys. This is estimated. That means the present value that I have taken for my liabilities is on the basis of 5%. Okay, the return that I'm expecting on the assets that I have created for funding my liabilities, the return that I'm expecting is 5%. ये क्या है? ये expectation है. By whom? This is given by whom? By actuaries. The benefit formula is 2% into final salary into years of service. The benefit that you're giving your employees is 2% into final salary into years of service. Now this might differ from employee to employee. आपके फंड में बहुत सारे एम्प्लॉयज हो सकते हैं, अपन सिर्फ एक एम्प्लॉय का एग्जांपल ले रहे हैं. अपन नेचुरली बहुत सारा नहीं ले सकते. I hope you guys understand it's going to create a lot of complication with just taking an example of one employee. The current service cost is 12,000. इसका मतलब इस साल that employee has worked, and for working that one extra year, that means his years of service would have gone up and he has earned a current retirement benefit of, I mean, he has earned a retirement benefit of 12,000. Obviously, that is a current service cost. Why? Because it is an expense that is accrued today, right? And there was an amendment which created a past service cost of 8,000. That means, sir, what do you mean by plan amendment? What do you mean by plan amendment? Plan amendment is some of the terms of the plans have been changed. मतलब पहले मैं देता था 1% of final salary into years of service. This is what I used to pay पहले. But right now I have amended my plan and I have said that I will pay 2%. तो obviously I don't apply this prospectively. मैं retrospectively apply करता हूँ. मतलब जो पुरानी cost मैंने recognize की थी ना at 1%, they will be revised and they will be created now at 2%. Meaning, sir, the retirement benefit that the employee has earned earlier will now, which was at 1%, uh, but now the rate has become 2%. So I will apply this entire amendment retrospectively. That means for the years that I was paying him 1%, I will pay him additionally 1%. So can I go backdated and recognize the cost in those years? No. What do I do, sir? I will have to recognize expense in total today itself when I decided to amend. I will pay the benefit retrospectively. I will revise the benefit retrospectively, but I will create the cost for the benefit that has been revised today itself, not retrospectively, because I cannot amend the books of accounts which were recognized earlier, which were created earlier. The actual return on plan assets during the year is 47,000. Actual loss on defined benefit obligation during the year is 10,000. Remember, one of the estimates that actuaries made, he has revised that, and as a result of that, it has resulted in loss of 10,000. Guys, remember what did we do? What did we do? We recognize first. Now, from an accounting perspective, what do we do? Sir, we have a rough idea that in income statement we recognize net interest and expense. Let us recognize that, right? Now, rather than calculating, how much interest income you're going to have on 7,50,000, then interest expense on 8 lakh, then multiply that by 6%, both of them. Just take net ना. अगर लाइबिलिटी ज्यादा है तो ऑब्वियसली एक्सपेंस ही आएगा, क्योंकि इंटरेस्ट एक्सपेंस विल बी हायर इफ द लाइबिलिटी इज हायर, तो अल्टीमेटली नेट में इंटरेस्ट एक्सपेंस ही आएगा. तो जस्ट डू दैट. टेक 50,000 into 5%, which is your discounting rate, to 2,500 is your interest expense. Right? And remember, guys, we show net. We don't show interest income and then expense and do all of that. No, we just show net. Sir, service cost will be how much? In profit and loss account, one more thing goes. In income statement, one more thing goes. It is just not interest expense, sorry, net interest expense or net interest income. Also, your current service cost and past service cost goes. Past service cost, why does it go? Because you've revised the plan with a retrospective effect. और आज आप उसकी cost recognize करोगे. And current service cost, why does that go there? Because why does current service cost go there? For a very simple reason, but because this benefit is accrued this year and total will be 20,000. So this will be expensed in P&L. Because this is a net interest expense, it will be expensed in P&L. All right, sir, fair enough. Sir, there was an actual loss that was there, sir. What about that? Sir, actual loss meaning, sir, because of the revision in the estimates, the loss came down to 10, that was 10,000. Sir, what about that? We will take that to what? OCI, other comprehensive income. Actual loss of 10,000 will be shown in other comprehensive income. Okay, sir, it will be shown in other comprehensive income. What else is shown in other comprehensive income? Remember, every type of remeasurement, every type of remeasurement is shown in IFRS. In IFRS, every type of remeasurement is shown in OCI. So, what do you mean by every type of remeasurement, and what do you mean by remeasurement in the first place? Remeasurement, actual gains and losses, comes from what? You revising the estimates. Remeasurement in case of actual gains and losses comes from actual, not you, actually is trying to revise the estimates. Okay, sir, why is the difference between expected and actual return on plan assets a remeasurement? I was expecting 6% return, actually got 8% or 10%. Why is that a remeasurement? It is a remeasurement because actuary's assumption did not turn out right. He anticipated 6%, but the actual return was something else, less than 6 or more than 6. That means it's a remeasurement. And how do you calculate that? Sir, how much is my plan assets? Sir, my plan assets is $750,000. I will say that multiply that by 5%, which is the rate that I was anticipating, I get 37,500. This is the interest that I was anticipating to earn. This is the expected interest. Now, by interest, what do I mean? Guys, whenever I use the word interest, say that return. This is the return that I'm anticipating on my assets, right? But what is the actual return that I get? Sir, the actual return that I get on my plan assets is how much? 47,000. That means it is more than what I anticipated, expected. That means whatever is the over and above then what I anticipated is something that is a remeasurement that results from what is remeasurement? Something that results from actual assumptions and losses going, sorry, actual assumptions of, about whatever the metrics are going wrong. So this is one of them because you anticipated 37,500, but you actually got 9,500. It's 47,000. That means 9,500 extra is something that is unanticipated. That is because of the result of wrong estimates by the actuary. So that should go in remeasurement and remeasure that's what makes it remeasurement, then that goes in OCI. So sir, in OCI, there's a loss of 10,000. In OCI, there will be a gain of 9,500. That means there's going to be a net loss of 500 that will be shown in OCI. And what will go in income statement in OCI? So 20,000 plus 2,500. 20,000 is the expense. Sorry, what will not go in OCI? What will go in income statement in IFRS? In IFRS, sir, what will go in income statement? It will be 20,000 plus 5,000 plus 2,500. 20,000 current service cost plus past service cost, 2,500 net interest expense. That is what will happen, right? And in US GAAP, it is going to be the same. And in US GAAP, it is going to be the same, but there are a few things that are different. So let us start doing GAAP now. But there is last line that I have written in IFRS, that is what we have to read. In IFRS, past service cost is not amortized. So मतलब US GAAP में होती है क्या? हाँ, we'll understand that. बट रिमेंबर जो भी रीमेजरमेंट होती है वॉट एवर इज द रीमेजरमेंट सर रीमेजरमेंट मीनिंग एक्चुअल assumptions and whatever the estimates are have not gone right because of that there's a certain gain or loss because of that there's a difference between what I'm expecting in terms of return on plan assets and what I actually get. Okay sir, fair enough, that is what the difference is. We do get that. Remember, you get them, treat them in OCI, you take them to OCI, but you never recycle it back to PNL. वो ओसीआई में ही रहते हैं, ओसीआई से कभी पीएनएल में नहीं आते. अब सर ओसीआई से कोई चीज पीएनएल में आती भी है क्या? रिमेंबर योर क्लासिफिकेशन ऑफ इन्वेस्टमेंट्स इन इनकम स्टेटमेंट्स इन द चैप्टर ऑफ एनालिसिस ऑफ इनकम स्टेटमेंट्स, सॉरी एनालिसिस ऑफ बैलेंस शीट, वेर ओसीआई एंड एवरीथिंग एल्स, एफईटीपीएल, एफवी, ओसीआई, वो सारी चीजें. तो आई होप यू गाइस रिमेंबर. आई डोंट नो इफ यू गाइस नो, इफ यू गाइस, आई होप यू रिमेंबर. So that is what it is. Now US gap, sir, how exactly will be treated in US gap? Sir, same thing. Defined benefit obligation 8 lakh, plan asset 7 lakh 30,000. Benefit formula remains the same, discounting rate remains the same. The expected return on the plan assets is different here, 6%. Sir, discounting rate is 5%, but the return that I'm expecting is 6%. Sir, what is the difference? Sir, what is the difference? ऊपर वो डिफरेंस आप लोगों ने नोटिस किया कि नहीं किया, मेरे को नहीं पता प्रॉपरली. बोथ ऑफ देम वर 5% गाइस. ये भी 5% था और ये भी 5% था. सर ये भी मतलब क्या? अरे दोनों सेम ही है. सर बोलना क्या चाह रहे हो, समझ नहीं आ रहा. अरे when the discount is 5%, that means this discounting rate will be used to calculate interest expense. That means present value of defined benefit obligation plan liability into 5% करोगे. और present value of, I mean जो भी present value नहीं, plan assets, whenever you're calculating, this is your interest expense. Interest income is calculated how? सर 6% से मल्टीप्लाई करोगे किसको? प्लान एसेट्स को. दैट गिव्स योर इंटरेस्ट इनकम. That is the difference, and then ultimately you will take the net of it, whether it's expense or income. यहाँ पे different है वो याद रखना. Current service cost 12,000, past service cost 8,000, actual return 47,000, actual loss 10,000. Okay, sir, we know this for sure कि income statement में US गैप में भी ये तो जाएगा ही ना, past service cost, current service cost, yes. तो past service cost 8,000, current service cost which is 12,000, they both will go in, they will in what? Income statement, right? ये तो जाएगा ही जाएगा. This is what a lot of students make as mistakes. This is what the common mistake I've seen. There's a difference in US GAAP and IFRS here, guys. US GAAP बोलता है that service cost, if it is present, will go in P&L, which is income statement, and if it is past, will go where? OCI. So something, if it is a past service cost, will not go in P&L, it will go in OCI. But it will be amortized to P&L. सर अमोटाइज मतलब थोड़ा 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 करके यू विल ब्रिंग इट टू पीएनएल. सर कैसे? दैट इज नॉन ऑफ आवर कंसर्न, एटलीस्ट फ्रॉम लेवल 1 स्टैंड पॉइंट. But remember, if past service cost is there, it will go into OCI and it will be amortized to PNL over the years. Right. सर याद करो मैंने क्या बोला था. आप इंटरेस्ट इनकम और इंटरेस्ट एक्सपेंस जो भी एक्सपेक्टेड होता है वो क्या करते हो? नेट करके बताते हो. इंटरेस्ट कॉस्ट इज गोइंग टू बी, सर हाउ मच इज द प्लान ऑब्लिगेशन? 8 लाख इनटू 5% 40,000. Expected return on plan asset 7,50,000 into 6%, that comes to 45,000. दैट मीन्स आपका नेट क्या हो रहा है? नेट इनकम आ रहा है. क्या आ रहा है? नेट इनकम आ रहा है. That means in income statement, what will happen? In credit, you will show an income of 5,000, and in expenses, you will show an expense of current service cost, which is 12,000. तो नेट में क्या इफेक्ट गया? नेट में आपका कॉस्ट आएगा 7,000 का. दैट इज व्हाट विल हैपन. सर ओसीआई में क्या क्या जाएगा? सर ओसीआई में क्या जाएगा? सेम थिंग्स, एक्सेप्ट फॉर ओनली डिफरेंस हियर इज पास सर्विस कॉस्ट. पास सर्विस कॉस्ट भी ओसीआई में आएगा. इट विल बी अमोर्टाइज्ड. एक्चुअल लॉस याद रखो 10,000 वहाँ भी ओसीआई में गया था, यहाँ भी ओसीआई में जाएगा. एंड ऑफ कोर्स द डिफरेंस बिटवीन द एक्चुअल एंड द एक्सपेक्टेड रिटर्न ऑन द प्लान एसेट्स विल ऑल्सो गो देयर. दैट मीन्स 2,000 एज अ गेन विल कम. तो सर नेट में ओसीआई में क्या होगा? सर पास सर्विस कॉस्ट इज अ लॉस. सर 10,000 एज अ रिजल्ट ऑफ द एक्चुअल assumptions, that's a loss. So 2,000, which is because I have gotten more gain, that is a gain. So 18,000 minus 2,000, 16,000 is what will be shown in OCI as loss. Right. And remember, past service cost and the actual items in OCI may be amortized in PNL in future periods. मतलब सर ये जो 16,000 का लॉस है ना, ये मैं अमोर्टाइज कर सकता हूँ OCI से PNL में. Was that allowed where in IFRS? No, it will never recycle. बट ये लोग बोल रहे हैं जो आपने ओसीए में रिकॉग्नाइज किया दैट कैन बी रिसाइकल्ड इन द फ्यूचर पीरियड एंड दैट इज व्हाट इज योर what recognition under US cap and IFRS with respect to defined benefit pension plan. The only difference remains the OCI treatment of past service cost. And ultimately, if something is recognized in OCI, can can it be recycled back to PNL? That also remains as a difference. All right. I hope you guys have understood this very, very well. With me, guys, so far, yes or no? Do you guys want a lunch break or should I continue? छोटा सा चैप्टर बचा है एंटिसिपेटेड एक में तो हो जाएगा बट लाइक आई एम दिस वाज द फर्स्ट टाइम दैट आई एम आल्सो डूइंग रिवीजन टू बी ऑनेस्ट गाइस so I'm also trying to understand a lot of things myself. So we anticipated, but I'm trying to make sure that I don't just brush up. I sort of go in a little depth as well. So are you guys understanding? Yes or no, guys? Go forward. Actually, you know what? Let me just complete the chapter only. Guys, now let us understand the second aspect, which is one of the benefits given by employers to the employee share-based compensation. Compensation which is based on share in some or the other way, right? So based on shares meaning, are we giving the shares? Yes. Are we giving options on shares? Yes. Are we giving cash outflow which is in relation to shares? Yes. Possible. That is what share-based payments are. It can be directly in the form of shares, it can be options on shares, it can be cash which is in relation to shares. Understand this very, very importantly. And in any sort of share based payment that you do or share based compensation that you do, remember तीनों types में ही there is something which is called as grant date, there is something which is called as what, there is something which is called as vesting period, and then ultimately the date when whatever base share based compensation is given to the employee. This can differ in terms of how it is called in different types, and I will discuss that. बट द पॉइंट है सर, जिस दिन ये शेयर बेस्ड पेमेंट दिया उस दिन ग्रांट डेट होता है, जिस दिन अल्टीमेटली वो उसको वेस्ट हो जाता है, दैट इज कॉल्ड एज whatever the date is at the end of the period, we will discuss that. बट जो पीरियड लगता है दैट इज कॉल्ड एज वेस्टिंग पीरियड। सर ये वो समझ नहीं आ रहा, लेट अस क्विकली अंडरस्टैंड दिस बाय एन एग्जांपल, तो आपको समझ में आ जाएगा। So, but share-based payment is of three types. First is the stock grant that you directly give the stock. You give an option on the stock, and the third is the stock appreciation right, where you sort of, give payments in relation to stocks. Basically, cash देते हो. Let us first understand stock grants. Here, the stock is awarded, guys. What is happening? The stock is awarded. That means आप पूरा का पूरा stock दे रहे हो. You are giving the stock. So let's say, for example, an employee, if he works with me for a period of 3 years, he will be given the shares. He will be given the stock. If he starts working with me, the stock is granted to him. There's a grant date. That means this right is given to him. But you know what? It is not that easy. He will have to keep working for the next 3 years to be able to utilize that right. And that is called as exercise date. And this period is called as vesting period, where slowly, every year that he works, he will start to earn that. He has been granted that right here. But for him to utilize that right for Getting the shares of the company, he will have to work for the next 3 years. And this period is called as vesting period. सर तो मतलब अगर मैंने कोई भी स्टॉक ग्रांट दिया है तो स्टॉक ग्रांट अगर दिया है दैट मीन्स इफ एन एम्प्लॉय स्टार्टेड वर्किंग विद मी एंड आई हैव अ स्कीम टू गिव स्टॉक ग्रांट टू द एम्प्लॉयज दैट मीन्स आई विल गिव देम स्टॉक्स ऑफ माय कंपनी आई एम नॉट गिविंग ऑप्शंस ऑन माय स्टॉक आई एम गिविंग stocks of the company sir today if the employee started working he is eligible to sort of have that but that means today is the grant date that means he's given the right but for him to utilize the right, he has to work for the next 3 years, and that's those 3 years. That 3 years are called as vesting period, where slowly that right will vest with him, and at the end of it, he will be able to exercise it. Basically, he will get the shares, and he can exercise the shares. He can use the shares however he want. He can utilize that right. He can keep it with himself. He can sell it in the market, whatever that may be. Uh, that is the ultimate exercise date, and that is how the timeline works with respect to a share-based compensation called as stock grants. Okay. Sir, so for a company, how would the company recognize the cost? Company is giving shares, so it should recognize the value of the shares as a cost. Sir, when to take the value? The value would be taken on the grant date. So that means the cost will be recognized for the shares given to the company as per the market price on the grant date. And if the vesting happens immediately, मतलब आज ही grant दिया तुरंत ही the right is offered and he is eligible to exercise the right. That day itself recognize the entire cost. But if there's time before he can earn that right, what if there's time before he can earn that right? During that period, recognize the expense on a straight line basis on the basis of fair value on the grant date. Right. And if the grant that you're giving in terms of stock is based on a particular performance, then you will recognize this on the basis of the fact that whether the performance is met or not. Basically, the target is met or not in terms of performance. Let's say, for example, the employees have to take the company's revenue beyond 10%. Sorry, we'll have to increase the company's revenue about 10% in the next 5 years. Okay. So, what are you trying to tell me? What are you trying to tell us? Let's say we are talking about a share based payment compensation where stocks are rewarded. So, first was stock grant, we understand. Second is performance grant or performance shares, where shares will be given of the company to the employees if the performance targets are met over a certain period of time. That means today the plan was announced and 5 years are there. Okay, 5 years are there and today the plan is announced. So, uh, if after 5 years or within 5 years, if the employees are able to take the revenue about 10%, the basically the revenue growth about 10%, they will get the shares. So, sir, the expense of this, which is of the shares, will be recognized over 5 years. Uh, over straight line basis, exactly like how stock grant was recognized on a straight line basis. No, there will be a difference. The recognition is something that is not a part of your syllabus right now. सर तो बेसिकली आप बोला स्टॉक ग्रांट जो फर्स्ट हम लोगों ने पढ़ा उसमें ओवर 3 इयर्स एवरी ईयर थोड़ा थोड़ा करके वॉट एवर इज द फेयर वैल्यू ऑफ द शेयर ऑन द स्टॉक ग्रांट ऑन द ग्रांट डेट विच इज लेट्स से 100 रुपीज तो 33.33 30.33 30.33 हम लोग हर रोज हर ईयर रिकग्नाइज करेंगे यस फॉर ओवर नेक्स्ट 3 इयर्स बट हाउ वुड दैट रिकग्निशन ऑफ द फेयर वैल्यू ऑफ द शेयर ऑन द ग्रांट डेट हियर हैपन इन टर्म्स ऑफ परफॉर्मेंस स्कीम दैट इज समथिंग दैट इज आउटसाइड द what I'm trying to tell you guys is that that is what a performance plan is. जहाँ पे shares will be awarded if the target is met in the next 5 years. So if the company is giving shares, obviously it is incurring a cost. How would the cost be recognized, sir? On the basis of fair value on grant date. जिस दिन ये plan announce हुआ. Right. So vesting is conditional upon meeting certain performance targets. Fair value is based on share price on the grant date. Encourages focus on long-term metrics. That means vesting का मतलब The right is announced. You have the right, but you cannot exercise the right if on if the performance targets are not met. Exactly like performance. Exactly like sorry, stock grant. Right. Sir, what do you mean by ESOPs? ESOP में यहाँ पे पहले आप स्टॉक्स दे रहे थे दोनों केसेस में. यहाँ पे यू आर गिविंग ऑप्शन. व्हाट आर यू गिविंग योर? यू आर गिविंग ऑप्शन. What are you giving here, guys? You're everything remains the same. Grant date, vesting date or exercise date, and vesting period. Let's say you're given 10,000 options to the employee to buy the share of the company at rupees 60. The options are given here, but he has to work throughout the vesting period. He has to work throughout the vesting period to what? To earn the right. And at the end of the period, if the value of the option is positive, he will exercise. If it is not, he will not exercise. Meaning, he has got a right to purchase 10,000 shares at 60. He can exercise the right at the end of the exercise period or at the end of vesting period, which is exercise date. If the price of the share in the market of that company is 80, then he will exercise because he has a positive value. But if it is not, then he will not exercise. Sir, so a company essentially uh, will have to estimate, will have to recognize expense, right? Sir, how would the company recognize expense? Sir, company is letting the share or the employee buy the share at 60. Okay, whose market price is more? So what do you mean by that? Market price is more will depend upon what the price is at the end of the vesting period, which is exercise date. Okay, so do we have to estimate that? Yes. Sir, what are you trying to tell us? What I'm trying to tell you guys is that we have to estimate what will be the value of the option on grant date, which will be based on the exercise price at the end of the, which will be based on the market price at the end of the exercise period. सर कंफ्यूजन हो गया, समझ नहीं आ रहा सर, बहुत सारी चीजें एक साथ बोल दिया. अगेन रिपीट गाइस. You will recognize expense for this ESOP plan on the basis of the options value that exists on the date when the plan is announced. Sir, how is the option value calculated? It is calculated on the basis of market price on the exercise date, which is right here, minus the options exercise price, which is 60. तो सर व्हाट आर यू गोइंग टू डू? यू आर गोइंग टू एस्टिमेट ऑन ग्रैंड डेट कि 3 साल के बाद स्टॉक, इफ द वेस्टिंग पीरियड इज लेट्स से 3 इयर्स, 3 साल के बाद स्टॉक का प्राइस क्या होगा? हाउ डू यू एस्टिमेट दैट यूजिंग ब्लैक एंड शोल्स एंड बाइनोमियल मॉडल एंड स्टफ लाइक दैट? तो इफ द प्राइस इज 80, दैट मीन्स 20 rupees is what the expense is of the company. It is letting the shareholder buy, the employee buy the stock of the company for 60, whereby the market price might be 80. That means company is incurring an expense of 20. Company is selling the share to the employee for 20 rupees cheap. That means it is the expense of the company, and that will be recognized over 3 years पीरियड ऑन अ स्ट्रेट लाइन बेसिस. मतलब चलो ये 18 कर देते हैं इसको, तो मतलब 6 6 6 6 6 इज व्हाट यू वुड रिकॉग्नाइज एज एन एक्सपेंस एवरी ईयर फॉर द नेक्स्ट 3 years. Sir, but what if the options value is not positive? It is negative. Then you don't recognize the expense. That's how an ESOP work. You recognize, sorry, you give an option. It is an employee stock option plan. सर बट हम लोगों ने यही एस्टिमेट किया, यहाँ पे किया तो आफ्टर फर्स्ट ईयर दैट व्हाट शुड द प्राइस बी, शुडंट दैट एस्टिमेट चेंज? सर वी आर estimating only at the beginning. What if we estimate throughout in the middle of the life? Sir, the market price estimate can change, and ultimately that can change the options value. Then how is this then should we change the options value? No. And I would recommend you guys don't get into that complication. Right now, just understand that right now you're estimating the value at the beginning. That's all, nothing else. Right. And there's more theory about this, and I think that's not very, very relevant for you guys. So yeah. And the last part is stock appreciation right, which is SAR, where a shareholder is given cash on the basis of how much is the increase in the stock price over the year. Over the year, matlab, over the years, matlab, over a set period. Basically, your company has announced a stock appreciation right today, and the time period of this right is 3 years. Is how much is 3 years? Okay. So what would happen at the end of third year? Shareholder will get a cash. Yes. So at the end of the period, shareholder will get the cash. Fair enough. Sir, on what basis the cash would be based? Rise in the stock price. That means, example, you will announce a plan where you say that if the stock price goes beyond 50, whatever is the difference will be paid to the shareholder, will be paid to the employee. So let's say an employee has 10,000 SARs, stock appreciation right. Stock price goes to 70, that is 20 rupees more than 50, he will be getting a cash outflow of 10,000 into 20. Sir, in this case, how would the expense be recognized? We don't get it. Do we have to estimate the stock price at the end today itself, or like how would the whole thing function? Can you please guide us there? Right now, it is not relevant to you guys. Only thing that you need to remember, in SAR, a payment is made in cash for the performance of share beyond a certain price over a certain period. Nothing else. Nothing more than that. And that's all for this chapter. We took 1 hour more than what I anticipated, but I think we have gone in enough depth for you guys to understand everything very, very well. All right. I hope you guys have understood everything. Yes or no in the chat box quickly so that we can take our lunch break. I'll give you guys a 30 minutes break. It's 2 2. We can meet again at 2:30 and finish up the two cash flow chapters. Yes or no, guys? Or what I'll do is I'll give you guys a break 30 and then we'll start with cash flow and 2. Okay? All right. All right. Hi guys, I hope you guys are back. Let's get started. Okay, let's get started with our reading, which is analysis of cash flow statement, part one and part two. A very, very simple, easy, straightforward reading. Again, one thing before we do this reading, there are a few things that here in this chapter that needs to be understood. Like you need to understand them logically. But because of the nature of the lectures that we are doing currently, their revision, I will try to make sure that I give you what you need to know from an exam standpoint. All right. So let's say, for example, indirect method. So, there are different steps that are there, and how do you go about, doing things in indirect method. So all I'll tell you guys there is that, how do you remember what exactly needs to be done from a standpoint of, uh, the exam. Like, what exactly is the purpose of cash flow statement? Sir, we prepare a cash flow statement to track our cash receipts and our cash payments and, XYZ. What exactly is the operating cash flow that I'm getting, investing, financing, because my financial statements are prepared on an accrual basis. What happens is, I show my revenue, my expenses on an accrual basis, revenue when earned, expenses when incurred. But a lot of times it can happen that my revenue is 10 lakhs, but the cash flow that I'm receiving from it is only 5 lakhs. 50% of my revenue I'm not able to collect. Possibly the reason can be that the sales that I've shown is fictitious. Uh, so the point is that cash flow gives you a deeper insights into how exactly firm is doing, and is it actually sort of delivering. I mean, is it actually in tandem with the income statement and balance sheet? So the kind of figures that are shown and everything that's happening in and around and balance sheet and income statement, cash flow statement sort of certifies that it is to an extent right. And if there's a huge gap, you can sort of analyze that what is the reason for that gap. Is it because probably a lot of a period like COVID where you had a revenue which is huge but you could not collect a lot of it? uh, so possibly there might be lesser cash receipts, and but today if that is the case where 50% of what you're collecting, 50% of your revenue is what you're collecting, so in that case then it becomes a little, you become a little suspicious that what's happening, why is it so, and stuff like that. So that is what the purpose of cash flow statement is, right? It can tell you what exactly is your liquidity, what exactly is your solvency, what is the financial flexibility that you have tomorrow if there's opportunity that you might have to grab. So for that you might have to do capital expenditure. So in that case, what to do, right? All of that is what it is. So the one thing that's very important that I think your takeaway has to be that it sort of highlights what is the quality of earnings that you have. So let's say 10 lakh rupees is what you have as revenue, but only 5 lakhs is what you're able to collect. That means the quality of earnings that you have is not great. What do you mean by quality of earnings? The people that you're selling to probably won't be able to all the sales that you have made are fictitious. So the quality of earnings that you have is not right, because that is earnings only on paper, right? At the end of the day, you have to collect cash out of it. And if you're not able to do that, at the end of the day, it means that your quality is not that great. Right, so that is what it is. That's what sort of cash flow statements helps you understand. And these are the few questions that are answered by CFAs. Whether additional financing will be needed or not. How, if there's an unexpected obligation that comes in, basically you have to sort of make an unexpected expenditure. Then what? How exactly a firm can seize new business opportunities if sort of they arise. What exactly are the regular operations that does the regular operations of the business generate enough cash to sustain the business? That also is something that you understand. Whether the company will be able to pay off the debts if they mature, stuff like that. All these things is what you understand, right? This is what the difference I've noted down here. What exactly is income statement, what exactly is balance sheet, and what exactly is cash flow statement, so that you guys are not sort of confused. That is what it is. Now, sir, there are three different types of cash flows that we prepare. So what do you mean by three different types of cash flows? There are three primary categories of cash flows that we sort of prepare. First is cash flow from operations, other one is cash flow from investing, and the third one is cash flow from financing. Sir, cash flow from operations is prepared via two methods. One is direct, other one is indirect. Let us start to understand how exactly cash flow from operations is prepared from direct method. But what do you mean by cash flow from operations, sir? This is the cash inflow or outflow from operating activities. What do you mean by cash flow from operations? Sir, it talks about inflow and outflow from operating activities. As simple as that, right? All right, fair enough, sir. When we are talking about direct method, what do you mean by direct method? Direct method directly accounts for such cash flow. inflows. So whatever are the cash inflows, you take them directly, you subtract cash flow outflows, and then you get your cash flow from operations. Simple as that. This entire cash flow calculation happens in a direct manner with respect to operating activities. So then cash flow from operations, or what is indirect? We will have a discussion around that. Don't worry. But that is what it is. Right. And of course, this is cash inflow and outflow from operations. That means we are talking about receipts and not accrual basis. Cash flow, cash received from customers is a receipt, right? Revenue is an accrual concept. It is based on an accrual number. Like whatever is accrued, sort of you recognize that revenue. That is not what is received. That is just you recognizing revenue because you earned it. That is the difference, remember. Obviously, cash flow from operations is which is by direct method, is more detailed and more, sort of easy to calculate. Sir, how to calculate, sir? How do we calculate? How do you go about it? First things first, understand what are the components usually that form a part of cash flow from operations. Sir, inflows में क्या आएगा? Sir, we are talking about operations. That means, sir, naturally it should click that it should click that. Okay, we are talking about operations. That means we're talking about regular business. That means cash coming in from customers that I have collected from the customers should form a part of my inflow. You can clearly see cash collected from customers forms a part of your inflows. Okay, sir, fair enough. Cash outflows, sir, what would form a part of cash outflows then? What the payments would be generally in terms of CFO, direct method? Obviously, if cash is collected from the customers and we're talking about operating activities, outflow क्या आएगा? Operating activities के terms में, operating expenses, salaries, rent, interest paid, taxes that is paid, right? Cash used in production for goods and services. If you've used some, obviously, if the goods you're selling, you must have, sort of bought it from somewhere, you have product produced it, whatever that may be, right? So interest paid and taxes paid, sir, interest paid, sir, this is a bit debatable, right? And what is the difference? We'll understand that. Now, if you see Shweta, and if you understand your notes, you'll see that, excuse me, you will see that, there are steps that are written, you know, that how do you start, what to do. I think you don't need to know all of that. I think it's very simple. It's pretty simple, pretty straightforward. So if you see in Shweta, there are steps that are written. I think I don't need to remember the steps. It's pretty simple. Let us take an example, quickly go to an example and understand this. All right. All right. Let's let's take an example of this company where we have been given the balance sheet and income statement of the company. And we are supposed to prepare what? Cash flow from operations via something which is called as direct method. Okay, sir, fair enough. Let's get started. Remember, the firm follows what? US GAAP. Remember what? The firm follows US GAAP. Okay, sir, fair enough. The firm follows US GAAP. Let's get started. Now, the income statement for the year 2018 is given. The sales, the COGS, wages, depreciation, interest, total expenses are there. You get income from continuing operations, then gain on sale of land, loss on disposal of PP. These two are what kind of items? They are infrequent items. That's why they are not shown above continuing operations. They are shown after continuing operations. Then you get your pre-tax income. Then you get your provision for taxes. Then you have net income. Then you have common dividends that are declared. Right? You can clearly see right here. Then balance sheet is given for the year 2017 and 18. Previous year balance sheet is also given to us, and current year balance sheet is obviously given to us. Right? You can see right here. Equity is also there, everything is there. You can see, you can tally your balance sheet and you can understand that liability is equal to asset. Here there are your total assets, that's your total liabilities, and equity, total assets, total liabilities, and equity. All right, simple as that. Sir, how do we start? Remember, what are the common items usually? What are the common items usually? Sir, cash flow from operations, if I'm calculating via direct method, the first starting point has to be we start with inflow. And what do we start with? Sir, The first point has to be the receipts that I have gotten from the customers. The receipts that I've gotten from customers has to be the starting point. That means cash collected from customers. Have I anywhere been given what is the cash that is collected from customers? No, sir, we'll have to calculate it. How do we calculate it? We have to use the figure of sales because obviously that has to be the starting point. Because बेचूंगा तभी तो मैं cash collect कर पाऊंगा. I'll only be able to collect cash when I sell. Right? The sales has to be the starting point, and 1,50,000 is the amount of sales that you have made. Yes, sir, fair enough. 1,50,000 is the amount of sales that you have made this year. Okay. Sir, receipts from customers meaning they were my debtors, right? And I collected from that because customers are my debtors. Let us go to accounts receivable. Okay, the opening balance of accounts receivable 11,500 and closing balance is 14,000. That means what? Sir, 1,15 11,500 is the opening balance, right? This is the opening balance of debtors. This was sold to them this year. And you always assume what? All the sales are always credit. So what will be the closing? What is the total amount that is owed to you by the debtors? What is the total amount that is owed to you by the creditor by the debtors? Sir, it is 1,61,500. This is the total amount that is owed to you. So ideally, this should be your closing balance. This should be your closing balance, right? At the end of 2018. But what is the closing balance? What is the closing balance, sir? Closing balance is 14,000. That means the difference, which is 161,500 minus 14,000, was collected from your customers completely. But you know what? I missed out on one detail. There was something else in the balance sheet, which was known as unearned revenue. The revenue that I have not yet earned, but I have received. 5,500 was the opening balance and 7,000 was the closing balance of unearned revenue. That means it has gone up by 1,500. That means I have collected 1,500 rupees more that I have not yet earned. That is the advance received from customer. That means this 1,500 will be classified as what? This 1,500 will be classified as what? Sir, this is the amount that has been received from the customer. That means it is going to be 1,61,500 minus 14,000 plus 1,500, and you will get your cash that is collected from the customers. Right. So you can see right here 1,50,000 minus plus. So now inflow majorly this is what comes out. We calculate outflow. Outflow में क्या आएगा? Sir, outflow consists of uh, sir, outflow consists of the goods, the cash that I've paid to purchase such goods that I am selling? Yes. How do I calculate that cash? Uh, sir, we'll have to calculate what are the total purchases. Uh, sir, what are you trying to tell us? Who do I pay the cash to for purchasing the goods? My suppliers. Okay, sir, I pay to suppliers. That means I'll have to go and see my accounts payable, right? That means accounts payable 8 was the opening balance. Then I would have made purchases. Uh, then, there would have been a certain amount. This is the total amount that is owed to them. But actually, the closing balance was how much for accounts payable? 4,500. That means the remainder I would have paid to them because this is what owed and this is what the closing balance is. That means I would have paid this. For that, I'll need purchases. So let us calculate purchases. Where are the purchases? I go to income statement. I cannot spot purchases. Shit, what do I do? Do you guys remember what is the formula for COGS? It is opening stock plus purchases minus closing stock. That gives you your COGS. Do you have COGS? Yes. Do you have opening stock? Yes. Do you have closing stock? Yes. Can you calculate purchases? Yes, sir. And the moment you get purchases, you know how to calculate your amount that is paid to the suppliers. So first you will have to calculate the purchases, remember, and then you calculate your amount that is paid to the suppliers. Now, remember, wages, interest, taxes paid, all of that will also form a part here. So, interest because we are following US GAAP. And if you guys remember, in case of US GAAP, what happens? In case of US, is the interest paid comes as a part of cash flow from operations. Whatever is the interest paid is an optional thing in IFRS where you can calculate, you can classify it as operating or financing. So three more components should come, sir. First, taxes paid, second, wages paid, and third, what? Interest. Sir, how do we calculate these three components? Then the most important component is taxes that are paid. That is the only part I think where you will face confusion. Sir, wages paid, any confusion? I don't think so. What is the opening balance? Sir, 6,000. What is the opening balance? Sir, 6,000. What is the closing balance? Sir, closing balance is 5,500. आई थिंक मैंने उल्टा इसके पहले ले लिया था बट आई होप यू गाइस अंडरस्टैंड व्हाट आई टेल यू मैंने उल्टा लिया क्या इसके पहले आई थिंक एनीवे चलो ठीक है व्हाट इज द ओपनिंग बैलेंस सर 6,000 ओपनिंग बैलेंस इज हाउ मच सर 6,000 इज व्हाट द ओपनिंग बैलेंस इज क्लोजिंग बैलेंस इज 5,500 सर व्हाट इज द टोटल वेजेस दैट इज incurred this year as an expense sir it was 7,500 that means 6,000 was owed at the start of the year 7,500 is what the wage expense is in the current year 6 plus 7,500 is 13,500 is the total amount that is owed. Sir, but what is the closing balance? Sir, the closing balance is 5,500. That means the remaining amount would have been paid. That comes to somewhere around 8,000. And you can see wages paid would come to somewhere around 8,000. Same thing you do for cash interest paid. The only place where you can face is go the taxes. We calculate that what are the taxes that we pay this year. Yes, you'll be able to spot the taxes that are payable right here. At the start of the year, it was 3,800, and at the end, it was 4,000. Whatever income tax expense is, which is recognized in the income statement, is at what amount? Sir, income tax expense is equal to what? It is going to be taxes that are payable as per the books of accounts minus change in DTL plus change in DTL. And you can clearly see right here from the income statement, from the balance sheet, that there is only DTL, there is no DTL. And how much has the DTL increased by? Sir, it has increased by 3,000. So I will have to subtract. That means change in DTL is 3,000. That means I will have to subtract 3,000. You can see right here, provision for taxes income statement is 25,000. Is how much? 25,000. How much is the taxes payable? Sir, it is going to be 28,000. What is even the point of trying to find all of this? What is even the point of trying to find all of this? Why are we finding what are the taxes that are payable? Now let us understand the logic. अब यहाँ पे आपको दिखेगा and when you even study your when you see the example in your Schweizer also and in your curriculum also and other places as well, when you see the example, you sort of see that there has been a certain calculation that is done by them. You know what? I wouldn't go by that calculation. I wouldn't go by that calculation. Right. Now, if you see right here, we have calculated the taxes that are payable, which is 28,000. Sir, what was the point of trying to find out taxes that are payable? These are the taxes as per books of accounts. Just trying to clear the concept, nothing else. That here, when I will take 28,000, that in the equation, so if I were to calculate, write the equation again, right here, Sir, income tax expense in the books of account, which is provision for taxes, is the tax payable as per the books of accounts. And we have okay. This is what you're supposed to pay, guys. What? This is what you're supposed to pay. This is what your provision for taxes has to be. That is already given. I'm just trying to make sure that you guys understand कहाँ से क्या आ रहा है, कैसे terms है, क्या है, क्या नहीं. ये reason क्यों है? Why is it that the taxes that are payable in the books of accounts are more? Why did I calculate this 28,000? Why the taxes that are payable in the books of accounts are more? Simple reason. There's a deferred tax liability that is created. You can clearly see. DTL दिख रहा है. Taxes that are payable, again to repeat, guys, taxes that are payable as per the books of accounts are 28,000. And ultimately, if you look at your provision for taxes, which are ultimately shown in your income tax, which is the taxes that are payable as per the books, tax books, it is 25,000. There's a difference of 3,000, and that 3,000 ultimately indicates what? It indicates DTL. Because why is DTL created? DTL is created because today, as per the tax books, you will be paying lesser tax, but in the future, you'll have to pay more tax. And that is why DTL is created. And it is highlighted by this fact. ठीक है, तो एक बार आपको मैंने एक रिवर्स में समझा के आई ट्राई टू प्रूव थिंग्स टू यू गाइस. ऑलराइट. नाउ sir, what is the logic of doing all of this? If you see right here, and you would see this equation even when you're doing your. Sir, how would this, what exactly is the logic of this? What goes behind this? How can we calculate? So 25,000 is what it is payable, is what is payable as per the tax books, right? Your so sorry guys. So this is what is your taxes that is payable. Sorry, I just lost the link there. My bad. Where was I? Yeah. So, sir, 25,000 is the tax that is payable. The tax books. If you go to your balance sheet, you can see taxes payable opening balance is 4,200. So, sir, 29,200 is the total that is payable. But the closing balance is how much? How much is the closing balance? Sir, the closing balance is 3,800. That means 29,200 minus 3,800. That means how much does that come down to? Uh, Whatever. Just hold on for a second. I'll just calculate that myself because we need the amount later on. Yeah. So it comes down to 25,400. These are the taxes that are paid. These are the cash taxes that are paid. But sir, यहाँ तो 21,500 आ रहा है. यहाँ तो 21,600 आ रहा है. Why so? Guys, we did not consider DTL. We did not consider DTL. 14,500 is the amount of DTL, which is the opening balance, and there's an increase in DTL. There's what? There's an increase in DTL. By how much? 3,000. And what does that mean? Increase in DTL means that you have to pay lesser taxes now, but in the future you'll be paying more taxes. And lesser taxes now means lesser cash taxes to be paid. And that's why you subtract this. So it comes to what? Somewhere around 3,000. Wait, hold on. I think I have sort of just made a mistake here. Uh, Hold on, let me just. Oh, added here. This has to be added, guys. And then you subtract the DTL, right? And that's where the amount will come in. So that'll come to somewhere around whatever the amount is. I don't want to get into the addition and the subtraction of it. That there's something there was a mistake here. So like yeah, so that's calculated DTL, and what you will arrive at your cash flow from operations ultimately. Right? That's how the whole thing would work. And these are the steps that are given for it. If you can see right here. कहाँ गया? This is where it is. These are the steps that are given. Right. Again, pretty simple, pretty straightforward, easy to understand. Nothing complicated here. All right. Let's move forward. Let's go to indirect method now, which is the indirect method to calculate cash flow from operations. Now, why indirect method, sir? What is even the need to calculate why indirect method? Is it because the data that is given to us is incomplete? Yes. When do I use cash flow from operations indirect method? Because the data that is given to me is not as complete as what it. Indirect method, I'm given balance sheet. Indirect method, I'm given income statement. I'm given all of that, right? But here I am not given all of that. So meaning यहाँ तो income statement balance sheet दिया ही है ना. So if you go ahead and if I look at the example, sir, we are here calculating cash flow from operations via indirect method. Sir, net income से start किया है, non-cash charges add किए हैं, there is something that is also adjusted here, and the working capital changes have been adjusted here. Guys, in indirect method, which you are using or which you are calculating via what? Sorry, in indirect method, which you are using to calculate cash flow from operations, in that data that is given is incomplete. So what do you mean by that? In that case, you will only be given with income statements and changes in working capital. That is all. You won't be given anything else. That is all you would be given, and that is your clue that you have to use indirect method. You cannot use direct method. Simple as that, right? So you'll not be given detailed balance sheet. You'll be given these are the changes. Okay. Sir, so income statement will be given to us, balance sheet will be given to us, not given to us. So changes will be given. That means I cannot directly calculate. Why? Because if balance sheet was given to us, then we would have been able to calculate what is the cash that is paid to suppliers, what is the cash that is paid to to the government in terms form of cash taxes paid, interest that is paid XYZ. We would have been able to calculate everything, but now we won't be able to do any of that. So if we won't be able to do any of that, then what? Uh, then how do we go about it? So we'll have to use something as a starting point, right? We start with net income. We start with what? We start with net income. Okay, so we start with net income. We'll have to make certain adjustments in net income. We add back non-cash charges. We subtract non-cash revenue because we are talking about cash flow from operations and net income is the starting point. Obviously, in that net income, in the computation of that net income, what has gone behind? Sir, we have included non-cash charges there. The charges which are expensed, which are shown as expenses, but actually are non-cash in nature. Cash has not gone out. Example, depreciation. Sir, we have also included non-cash revenue. Revenue that is income, basically that is not cash, that I have not received any cash for. That is non-cash in nature. I will have to subtract that as well, right? That has to be the starting point, and these are the starting adjustments that I make. I will also consider gain and losses that results from non-operating activities because I'm talking about cash flow from operations. Sir, meaning I'm calculating cash flow from operations and there's a gain or loss on sale of land. What do I do about that? So there's a gain or loss which is resulted from sale of land. Sir, anything of that sort that is coming in that doesn't come from operating activities because land is a part of investing activity, doesn't come from operating. It is not my regular source of business, regular course of business. What do I do? I'll have to remove that. So remove that gain. And if there's a loss, add back that loss. And obviously, the third adjustment that I have to make is changes in working capital. And I will give you guys a trick of how to remember that. But the CFO is calculated as net income plus non-cash charges minus changes in or investment in working capital. Sir, what are the charges, non-cash charges that we usually add? Sir, what are the non-cash revenue that we usually subtract? Non-cash charges that usually add depreciation, amortization, loss on disposal of asset, asset impairment write-downs, amortization of bond discount, increase in deferred tax liability, losses in equity accounted on equity accounted associates. Again, I would not like you don't need to sort of remember this. So what do we need to subtract, sir? We need to subtract gain on asset disposal. That's that's something that doesn't come from investing, operating. It comes from investing. Gain on early debt retirement financing, river impairment, something that's non-cash in nature. So it's a non-cash revenue, right? So you sort of have to subtract that amortization of bond premium, decrease in deferred tax liability, all of those things. So working capital adjustments. Now this is very, very important. Remember, how do you adjust working capitals? Sir, if it's a current asset, if it's a current liability, if it's a current asset, and that asset is going up, that means I told you that changes in working capital will be given to us. There will be no balance sheet that is made. It would have been told to us that listen, stock is increased by 2000. If stock is increasing by 2000, that means current asset, which is a stock, has gone up by 2000. That means if current asset has gone up because it is an asset, that means I would have put in my money there. And if the asset is going up by 2000, that means my extra money is getting blocked by 2000. That means my cash flow is sort of getting affected because my money is getting blocked more. That means I should reduce. If current asset is going down from the previous year to current year, that means current asset has reduced. That means the cash that was stuck in is not stuck in anymore. That means it is free up. That means what will happen? That means it's a good position from a cash flow perspective. We should add it. Current liability, if it is going up, what happens? That means, let's say creditors. If creditors are going up, what does that mean? That means earlier I owed them 1000. Now I owe them, let's say 2000. That means 1000 rupees more is what I owe them. It is going up. What does that even mean? That means that I have not paid them cash yet. That means I have more cash to use in my business. That means it's a good thing from a position of the company in terms of cash flow, and that's why I should add it. If liability is going off down, creditors are going down. That means I'm paying them off, and if I'm paying them off, cash is reducing, and that's why I should reduce it, right? And that's what we're supposed to remember, right? So you start with net income, you add back all the non-cash charges and etc., and then you sort of adjust for working capital changes, non-cash charges, and sort of subtract non-cash revenue, and then you adjust for working capital changes. That's what you do. All right. Now, what are the common non-cash adjustments? I think, sorry, this has been repeated again. We have discussed this, right? Let's quickly go to the example, guys. Now, guys, I hope you guys remember that what did I tell you? Why would indirect method be needed? Because balance sheet would not be given to you. Only these changes would be given to you. So you can see, if you see current liabilities and if you see current assets, pick out current liabilities and pick out current assets. Pick out current liabilities and pick out current assets. Current assets, cash, account receivable, inventory. Current liabilities, there is accounts payable, wages, interest payables, unearned revenue, taxes payable, dividend payable. You'll have to adjust these things. Obviously, now when you're calculating cash, you literally don't adjust cash. So this has to go out. But if you see account receivable is going up from 11,500 to 14,000, that means more money is getting stuck with account receivables. That means lesser money is available for me. That means what? That means it's not a good position from a standpoint of cash. I'll have to subtract these 2,500. That is how you make the calculation. Now, I hope you guys know this, and I have sort of highlighted that earlier when I started this again, that these changes, these accounts will not be given to us. कि account payable पहले 4,500 था फिर 8,000 हो गया. It was 4,500 earlier, now it become 8,000. No, that's not what will happen. What essentially will happen is they will give you that accounts payable have gone up by by 3,500. Wages payable have gone down by 500 and stuff like that. That is what will be given to you guys, right? So what do you start with? You start with net income. You'll have to add the non-cash expense. You'll have to deduct what, sir? The ones that are not in the nature of operating. Meaning, sir, Arey, I told you, no? Do you guys remember? कि यार अगर what is something is investing, if something is investing, you sort of don't consider that. So your gain on the sale of land was there in the income statement that is there. If you guys remember the income statement, I'm continuing the example, previous example. Income statement, if you see there was gain on sale of land and loss on disposal of PP. Both of this doesn't belong to operating. What do you have to do? Sir, consider that. तो gain को क्या करोगे? You'll have to reduce that because it doesn't belong here. And loss you'll have to add back. So what do you do with gain? Gain you reduce. Loss you add back. And then you can start adjustments with respect to what changes in working capital, right? As account receivables have gone up, that means more money is getting stuck. That means it is not a good position from a cash flow perspective. That means you reduce it. Inventory, it is going down. Inventory is going down. If you see stock here, this data exactly will not be given like that. It will be given but right now we'll have to fetch it from there only. So inventory is going down, stock, current asset, stock. Inventory is going down from 8,000 to 6,500. That means money that was earlier getting stuck in inventory is not freeing up. And the difference is 1,500 and you add that back. And the same thing you do for everything. Right. That is what you do. So let's say, for example, taxes payable, one of the current liabilities. Earlier, the taxes payable were 3,800 and now it is 400. That means it is going up by 400. And if liability is going up by 400, that means you have more money that is freed up for your business because you're not paying the liability. You have more money that is freed up and ultimately you add that back. And what do you add back 400? So taxes payable, you can clearly see 400 has been added, right? And the last adjustment would be for the deferred tax liability. Deferred tax liability, again, one of the what? It is one of the non, it is one of the non-current assets, but it is a non-operating asset. I mean, sorry, it is a non-current operating liability. We'll have to adjust that as well. And deferred tax liability will be adjusted as well. It has gone from 14,500 to 17,500. It has increased by 3,000. That means you are paying lesser tax in the business today. That means more money is getting freed up and you'll have to adjust that as well. Again, I'll repeat, what is the nature of deferred tax liability, sir? It is non-current operating liability. And if deferred tax liability, because the deferred tax liability, you're paying lesser taxes today because you're going to pay more taxes tomorrow in the future. But from a cash perspective, they don't see about the fact that they don't see this that, oh, you're paying lesser taxes now, in the future you'll pay more. They don't care about that. They just talk about present. Oh, you're paying lesser taxes today by 3,000 because your DTL has gone up by 3,000. Oh, that's great. And that's what we do, right? So you sort of will have to adjust increase in deferred tax liability as well. What if, sir, there was a decrease? You would have subtracted that. And ultimately, you arrive at what? Cash flow from operations. You ultimately arrive at what? Cash flow from operations, and that's how you calculate cash flow from operations using something which is called as indirect method. Very, very simple, straightforward, easy. Don't complicate it. Only two things that can be difficult to understand here is first, sir, how do you adjust the working capital changes? And I've just told you guys, if the underlying that we are talking about is a current asset, so if the current asset is there and if the current asset balance is going up, that means asset is balance is going up. That means my more of my money is getting stuck. Not a good news from a standpoint of cash flows. That means, sir, what should happen? Sir, the we should deduct it. If the current assets are going down, that means what happens? So if current assets are going down, that means, so the money that was earlier stuck a lot, now it is getting freed up. That means I have more money to use in my business because my current assets are going down. Oh, that's a good news. I should add it. Current liability going up, that means it's a good news. Why? I should add it. Why? Because, sir, earlier it was at 5,000, now it is going at 7,000. That means I owe more money. And if I'm not paying to them, I have more money to use in my business. If current liability is going down, not a good news because I'm paying my liabilities. That means I'm ending up spending the cash. That means it's not a good news for me because I mean, it's not a good news for me from a cash perspective. So that's how you account for the whole thing. Right. So that is how your direct and indirect method works. Right. I hope you guys are following. Right. Guys, with me so far, yes or no in the chat box. So that we move on to our third method, which is cash flow from investing. जो भी मैंने बोला है उतना ही आप लोगों के लिए relevant है. That is all is required for you guys to know at this stage. Obviously, you can't get into the depth of it. Direct method works. Also, I think I don't think my is going to support me anymore. So what I was thinking is I stop from here and then we continue again tomorrow. Because all we are left with is cash flow from investing, cash flow from financing, FCFE, FC, and ratios from this topic. And then there are your deferred taxes. So I don't think I have my throat has it in me anymore to sort of continue. It's been good for 4 hours now, for 4.5 hours that we've been talking. So I think I'm going to stop today. Thank you so much, guys, for joining in, and I'll continue tomorrow. I'll let you guys know again. I'll send you guys the link and everything else. So, yeah, that's about it, I think. Sorry again, sort of that. What is the last Q&A part? I don't know. So, Palak, you'll have to sort of help me out here. What do you mean by last Q&A? I'm just sort of waiting. But yeah, I don't know. I think anyway, we shall continue tomorrow. We also do portfolio risk and return part two. So yeah, that's it. That's it for today, guys. Thank you so much. I'm going to stop. Again, I don't think I can continue. That is why I'm sort of stopping. So yeah, that's it. Thank you so much. Bye bye.